India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning, and we're coming to you as always from the CNBC-TV18 Motilal Oswal studios. On balance, I mean, things are looking a little better this morning. We'll tell you why as we go along. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, good morning.
Hi, good morning, Prashant. Good morning, Nigel. I don't know where to start, right? It's whether to talk about that big positive, which is the RBI approving the highest ever dividend payout to the government, or talking about those fabulous numbers from NVIDIA. We have a lot of positives to deal with this morning.
Well, that's right. And yesterday we had a fairly volatile session as well because of the Nifty Bank weekly expiry. Today we have the Nifty expiry, so plenty to look forward to.
And in a positive way,
Yeah.
I reckon. But, let's see, because there's this election thing, which, of course, is hanging, and it's keeping kind of everyone a little more cautious. But let's begin by telling you what you need to know. Yesterday, around market closing, actually, it was post-market hours, 3:35, 3:40 or so in the afternoon, you had that announcement from the Reserve Bank of India about the dividend which it's going to pay to the government of India for FY24. And that number is the highest ever in its history. I mean, the transfer is going to be worth 2.1 lakh crore for FY24. And this is, almost double of what many were anticipating the number would be like. What this means and why this is kind of important, the size of it, it's so outsized, and that's the reason why you need to take note of it. So essentially, this mega RBI dividend means that government has about nearly 0.3% of GDP, as a percentage of GDP, it's 0.3% extra fiscal space, which the government can decide, the new government, which will come in and then, of course, present the budget perhaps in July. It will have this extra money in its kitty, and it can decide how to allocate it. It could decide to curb expenditure, this could go towards meeting fiscal deficit targets, or it could actually be used to spend, right, expenditure on various schemes, infrastructure, etc., etc., etc. So that is essentially the big news which came right after the stock markets closed. Bond markets, by the way, were still trading. And, the 10-year here fell sharply, about 6-7 basis points is the kind of slide that we saw. I do suspect that maybe the sharp rally that we saw, there was the expiry effect, etc. as well. But I think the Bank Nifty at one point was down 1% at 3 o'clock. By 3:30, it was down about just 1/3%. The Nifty also saw a sharp recovery from the day's low. Maybe the market was getting a sense of something like this coming. But we'll see. Today, of course, the rupee and bond markets are closed. So you will not see a direct kind of indication of how much the bond market likes it. The bond market likes it. As I told you, prices went up, yields fell very sharply. The other talking point, of course, is the NVIDIA numbers which came through after market hours. I'm talking about after US market hours. And, second quarter projections beat estimates. The numbers for the first quarter also beat expectations. They reported numbers for the quarter ended April, and that's Q1 for them. So Q2 also was much better. Stock in after hours up 6%. The reason NVIDIA, of course, is important is because it's like the Pied Piper for everything tech and AI. Everything tech and AI. And I think you'll be seeing some of that action across these names in Asian markets, etc. as well. Generally, this is good news for technology. Nasdaq futures, by the way, the last time I checked, were up in the green. Overnight, without NVIDIA, because NVIDIA came, as I said, after market hours, so the changes are on your screen, not very much. Nasdaq was down mildly. The 10-year was up 1 basis point, and you had the dollar index, which hit 105 or so, and then closed slightly under it. You also had the FOMC minutes which came for the last meeting, and they're, to be sure, stale. They're backward-looking, they're not forward-looking, but they had some hawkish comments, and that at the margin, basically noted that many FOMC members are talking about keeping rates higher to get surety that inflation is coming down to their target 2% number. Oil prices are down again 1.5%. This is good news. We are now under 82, 81.74 or so is where we left off. And I think this morning the prices on your screen, it's even lower. So where does all of this leave us? I think in a decent kind of a setup. We ended yesterday around the short-term resistance and that number is 22,586. That's a 78.6% retracement of the full fall. And we, of course, hit a high of 22,625 or so. And then, of course, that was the adjusted close, which is on your screen. The all-time highs, which is just about 200 points away, still very much in sight. The line of sight is there. It's just, I think, a matter of when. Supports for the Nifty come in at the 20 and the 40-day exponential. I mean, the numbers change, but the levels in terms of the moving averages don't. So that, I think, is something to watch out for. And banks, which have been lagging for some time now, can they come back into some amount of action? The reason I'm specifically mentioning banks today is because yields have fallen. For a lot of public sector banks, even private sector banks, that is a very positive environment that banks with a lot of bond portfolio, especially a lot of bond portfolio, would like to see. And we'll see where this one goes. But resistance for the Nifty Bank is 48,479, which is the 50% retracement. And then the 61.8% retracement is 48,832. These are near-term levels. I mean, you just need a day or two good days on the Nifty Bank and you'll be there. Bank Nifty on the lower side should not break for 47,340, which was the recent low that we saw. The GIFT Nifty is going to come up on your screen, and I think that's indicating a flattish kind of start, 8 odd points higher. But, I think the big sort of date is, of course, with the election verdicts on the verdict on the 4th of June, and I think that is kind of curbing and keeping back risk, sort of positive risk sentiment. It's been doing that for the last couple of days, even as we're building in some of these sort of positive cues, so as to speak. Sonia.
Oh, absolutely. And I think, the big positive for the market today is, of course, this dividend, right, that the RBI has announced to the government at 2.11 lakh crores. Now, a lot of brokerages, I went through a couple of reports, so just trying to put out a couple of views. The common view is that this will help the government trim its FY25 fiscal deficit. Morgan Stanley, in fact, put out a note where they said that it could reduce the overall government borrowing as well if other revenue collection is in line with estimates. So this is a big positive for the government. And the higher dividend represents an additional fiscal revenue of around 0.4% of GDP. So this is a big positive coming through. And of course, the market will react to it quite well. The other big positive is NVIDIA numbers. Now, NVIDIA has zoomed past that $1,000 per mark for the first time ever. Revenues beat expectations, went up almost 270%. But the important point is, and something that we had highlighted post last quarter's numbers as well, is that a lot of Indian mutual funds, both active and passive, have exposure to NVIDIA. So, if you want to get exposure there, then many mutual funds have it. We have that list as well, on our website. But just a couple of cases in point: the Motilal Oswal Nasdaq ETF, the Kotak Nasdaq 100 FOF, the Mirae Asset NYSE FANG ETF, the DSP Innovation Fund are just a couple of names that have exposure to NVIDIA. And perhaps, that's the way you can sort of climb onto this rally. So that is another space to look at. In terms of stocks in the news this morning, I'm looking at Nykaa, because the numbers were good. Of course, the company had come out with their quarterly highlights a couple of weeks ago, so we had a fair indication of which way things are headed. But very good numbers. Profits have gone up. Revenues have gone up about 28%. And if you look at the market, right, I mean, the Nifty has already put on quite a bit of weight in the last couple of days and weeks. So from the 9th May lows of 21,950, the Nifty is already up about 600 odd points. So that just goes to show, in fact, 650 points to be precise. So given that we have this positive news flow this morning, the market will definitely choose to build on to their gains. But let's see how far we can go. Around this 22,600 mark has proven to be a bit of a resistance for a while.
Well, that's right. Sona, just to sum up what you said, the RBI's dividend, well, that'll support the domestic-facing themes. And NVIDIA's numbers, it's a $2.5 trillion market capitalization, bigger than the German stock market as well. So that could keep tech stocks excited as well. But in yesterday's trade, we did see a good recovery from the low point. And part of that was, because there was a bit of a short covering bounce that did play out. So on the Nifty Bank itself, you did see the open interest came down by close to around 6%, or telling you there was an F&O factor that played out in trade yesterday. And if you pull up the chart, even yesterday we made this point, the 50 DMA is very, very important. Intraday it did breach that level, but it ended bang in line at around that 50 DMA. And today, in fact, it will be important to see whether or not we want to go and test yesterday's low, or we can hold around these levels. That's going to be crucial. The FIs, what did they do in yesterday's trading session? They unwound 6,000 long contracts, added close to around 2,000 contracts odd on the long side. So the swing factor, there's close to around 7,000 contracts. And that's where the net short positioning now moves to around 2.2 lakh contracts as it comes up for you on the screen, going up by around 9 to around 10,000 contracts. The options data. Now, these strikes expire today, so that's why it's important. 22,650 call, 22,600 put. Both of them fairly active in trade yesterday, and just plugging the numbers with their premiums. For the day, the range will be this 200-point range, 22,500, 22,700. Going by the options data that we're looking at. If the lower levels break 20 and 50 DMA, they're going to be important on the downside. The Nifty Bank as well, that was a swing factor yesterday, and we pointed that out as well. It went to a lower of around 47,400. So that becomes important to defend. If that breaches, then you're looking at the 100 DMA. For the time being, we're hovering around this 50 DMA. So you'll want it to consolidate a little bit and try to move back up to around the 20 DMA. In terms of stocks that I'm looking at, Ramco Cements, those numbers were quite disappointing on the margin front. But the absolute number was okay on the EBITDA front because they sold a higher amount of volumes. So they've reduced debt, they've cut back their capex guidance. So because of both those two factors, I think that stock will be in focus. Rank underperformer, not moved anywhere in the last 1 year or so. In fact, it's corrected from the top. So I'll keep an eye out on this one for today's session.
Okay, thanks a lot for that, Nigel. Well, let's kickstart the show on that note. On the equities front, we have Vikas Jain of CLSA, who says that the FII sold $1.1 billion worth of Indian equities in April. Most of the key emerging markets saw outflows except South Korea and Thailand. All categories of FII funds sold Indian equities except for India-dedicated passive funds. So far, May has already seen selling of $3.6 billion by FIIs, turning them into net sellers of $3.3 billion this year so far. FIIs actively bought industrials, IT and communication while they reduced their relative weight from financials, metals and staples. Inflows into domestic mutual funds moderated on a month-on-month basis to $3.4 billion from $5 billion, but was handy enough to counterbalance the selling of FIIs. Okay, well, the money markets are closed today on account of Buddha Purnima. So happy Buddha Purnima to everyone who is celebrating. But plenty of stocks to look at today. Well,
that's right. Let's run you through the list that we're going to be tracking in our special Top 10 segment. The list comes up in the screen. Jubilant Foodworks, Nykaa, Metro Brands, Ramco Cements, Garden Reach Shipbuilders. All of them will be reacting to positive news flow. While on the flip side, we have 5 apiece today. You have Power Grid, Sun Pharma, Torrent Power, Petronet LNG and Gland Pharma will be reacting to negative news flow.
All right, Taimur Beg is Managing Director and Chief Economist at DBS Group Research. He's joining us now. Taimur, good morning. Good to have you with us here. Thanks very much. I'll try and sort of get you to answer something local related, which is, of course, the central bank here, RBI, transferring that record amount to the government for FY24. It does open up a little bit of extra fiscal space, and that's always welcome, isn't it, Taimur? How would you look at it?
Yes, but I also would point out that there is a likely miss on the disinvestment side. So this would be a good buffer to balance it out as opposed to being a source of additional fiscal expansion. So to me, it's the fiscal surprise would be positive only when we realize how the dividend would be treated. Would it be treated as a recurring amount that can be matched against ongoing expenditure, or would it be treated as a bit of a one-off bonus surprise, which can be used for some degree of consolidation?
But this is mostly relevant for the next budget, right? F5, when the new government presents that in July. That's when we will know.
Right. So the immediate impact with respect to market liquidity is, of course, nothing. This is going to come with a lag. And the amount that is done, I mean, look, you can think of the budget both in terms of cash accounting as well as accrual accounting. So it doesn't really matter whether it falls under the 24-25 budget or the 23-24 budget. What matters is the overall fiscal deficit and the overall fiscal debt. Will that be addressed through the bonanza, or would it be accommodated through the bonanza?
So, Taimur, just a couple of questions. What is the extra fiscal space that you see the government having right now? And is there a possibility that this could reduce the overall government borrowing as well if the other revenue collection is in line with estimates?
I think from a debt issuance perspective, this certainly reduces some of the pressure. If we were going to have shortfalls in other sources of revenue, this certainly acts as a balancing factor. So therefore, it's a piece of good news as far as the fixed income market is concerned when we are looking at from the supply of bond perspective. I don't necessarily think this is going to immediately cause a recalculation on the government's part in terms of borrowing calendar and issuance, because there are substantial outlays planned in terms of expenditure. So then question is, do you, to my earlier point, do you accommodate those expenditures because of the bonanza, or do you overall take a sanguine look at the fiscal outlook and say that on the disinvestment side, there might be some undershoot, and therefore this should be seen as a balancing item?
Hi, Tamur. Good morning. Good to see you. So the government uses this dividend maybe to, take care of its borrowing needs. It could have an impact on the bond yields here, right? How do you see the money market instruments pan out, both the yields as well as the rupee?
Right. So I think both the yield and the rupee are equally a function of domestic factors and international factors. And the international factors, of course, are dominance of US dollar and the flattening of yield curve that we're seeing with the short term going up, especially in light of the overnight Fed minutes. So from a domestic factor perspective, I think this is supportive of yield. It doesn't necessarily hurt it, but on a international basis, there are a whole bunch of other headwinds in place. So net, I'm not necessarily looking at an additional buy signal for Indian bonds just because of the bonanza.
Okay, no additional buy signal. Just coming back to that extra fiscal space that the government would have now, right? So the government would have to decide between either increasing their spending or reducing their fiscal deficit while they present the final budget in July. What is your best guess?
Well, there is what one would like to see and what would actually see, right? So from what I'd like to see, as a former, I'm a fiscal economist, of course, I would like this surprise addition from the dividend to be used as a saving tool as opposed to accommodating expenditure. I think that this is going into the post-election phase, so I don't think there's going to be that much demand to announce additional expenditure just because this has come in. So I would like to think that what I would like to see and what would actually happen are more or less the same thing, which is that the government would use it as a balancing item for some of the other revenue expenditures which might be coming under the budgeted amount.
Taimur, any other sort of top-of-mind issues which you think are important as we sort of head into the next couple of months? We have the election result, of course, and I'm sure when you talk to clients, etc., that comes up as it's a talking point, it's a conversation point. But of course, no one really knows how what comes off it. We'll know on the 4th of June. But really, I mean, in your conversations with foreign clients, etc., who've been big sellers, by the way, here in India, I'm talking about the stock market. What are some of the things that you're hearing?
I would not necessarily take some monthly selling by FIIs as a sign of nervousness about the election. I think that's a global development right now. All emerging market stocks have seen outflows. China might be only one exception, but that's been beaten down so much, there might be some value there. Virtually most stock markets around the world look very expensive. Only the US has a big secular driver, the whole AI story, that is perhaps justifying some of the upside. Elsewhere, I think given where interest rates are, given where interest rates would remain for a prolonged period of time, I think it's a tough slog for stock market. So I wouldn't necessarily look at FII selling of Nifty or Sensex as a major source of uncertainty about domestic factor. It's a global development in my view. As far as election-related developments are concerned, I don't think it matters that much. I don't think anybody is talking about a huge upset. It's about the margin of majority and the likelihood of the coalition strength and so on. I don't think it's that big a deal.
Some economists believe that some more steps could be taken by the RBI, whether it's in the form of a near-term GSEC auction cancellation or a reduction. These incremental steps cannot be ruled out. Are you factoring that in as well?
Well, I think that given the global factors, which is pushing up yields around the world, anything that the RBI can do in terms of impressing the market with respect to the supply of bonds out there or its own confidence about dealing with inflation and liquidity, I think is a positive sign and will be seen constructively by the market. Look, the big pull from the US makes everybody bearish fixed income. And therefore, you need to do things like fiscal consolidation and improving the supply outlook to balance out that rather difficult external environment. And I think from that perspective, I would expect the RBI to do some good risk management strategy actions going forward.
Okay, Taimur, great speaking with you. Thank you so much for giving us your quick thoughts on the news flow that has come in. It's a positive for the bond market and, of course, a big positive overall as well. The RBI approving the highest ever dividend payout for the government. Well, let's do one thing. Let us slip into a quick break on that note. On the other side of the break, we'll get our list of top 10 stocks with our entire research team. Stay with us. Well, this morning things are looking very good. Let's not forget that the Nifty is just 1% away from lifetime highs, and the Nifty has actually pulled in a good amount of weight. I mean, from the 9th May lows, the Nifty is up almost 650 points, and this morning lots of positives to talk about. So let's get straight to it. Our research team is standing by with the list of top 10 stocks. First up, Vivek is joining in to tell us about Power Grid. Vivek, good morning.
Well, good morning. So Power Grid is on the radar. When you're looking at the numbers, overall it's a slight miss against what the analyst was expecting, what our poll was also indicating, and the consensus estimates. So expect some profit booking today, and the stock has done quite well. So first up, when you're talking about the revenues down by almost 2.5%, coming in at the 11,050 crore mark. Now, when you're talking about the EBITDA is down almost 9% on a year-on-year basis, and it has come in at close to 9,142. Now, the expectations were actually quite high. When you're comparing it to our poll, Antique estimate had an expectation of close to 9,500 crore. So it has missed even the lowest end of the expectation as far as the EBITDA is concerned. EBITDA margins has come in at 82.7% versus 88.9% on a year-on-year basis. Again, quite significant contraction as far as margins are concerned. Net profit down by almost 2.1%. Now, from the financials yesterday, the calculated capex has come in at close to 12,500 crores. So that's a strong number. So that's a positive. And commissioning for FY24 was close to 7,620 crore. Now, talking about FY24, Power Grid actually won quite a few TBCB projects, almost 10 TBCB projects. Estimated cost of all of these projects put together is close to 26,900 crore. Telecom revenues aided up 20%, but consultancy revenues this time around was down 56%. Expect some profit booking today.
Okay, all right, Vivek. Thanks a lot for that. Well, let's hop across to Ekta. Sun Pharma came out with its set of numbers in the final hour of trade. The stock saw a bit of a spike up, but Ekta's tuned in to the con call details. Ekta, tell us more.
Well, yes, the conference call for Sun Pharma took place post-markets yesterday. The guidance was a little disappointing according to analysts. So the management has said FY25, they expect high single-digit consolidated top-line growth. All businesses are positioned for growth. The ramp-up of the global specialty business should continue. They see a strong quarter for Winlevi, which is basically one of their specialty products. And they expect a pickup in Illumia as well. But they do expect R&D to be higher at around 8 to 10% of sales. And there was no guidance on the EBITDA as well. So I think that would probably weigh a little bit on the street. And in FY25, the company does plan to launch their specialty drug for alopecia. So I think that would be closely watched. They're working towards GLP-1 drugs. Supplies from Mohali have restarted slowly, and they have undertaken enough correction for various audits or US FDA issues that they're facing. CLSA downgraded the stock to underperform. Target price is 1610 due to limited upside and lack of near-term triggers. Nomura is neutral. They say Q4 and FY25 guidance is below estimates. Jefferies has raised the target price, but they expect a subdued FY25 and growth to rebound from FY26 onwards. So I expect the stock to probably be in the red today.
All right. Ekta, thanks very much for that. So keep an eye out on Sun as markets open. But Jubilant Foodworks is the next one, which also reported numbers. Mangalam is here with details on this one. Mangalam, morning.
Good morning. So if you look at Jubilant Foodworks reported numbers, you would see a huge spike, but that spike is largely because of the consolidation of the DP Eurasia business that came into the company's fold from February 1. India business largely in line with expectations, but the net profit was boosted by a 170 crore exceptional gain. So let's take all of this individually. Overall revenues grew around 24%, close to 1572 crores. EBITDA grew around 25%. The margins improved a little bit, but that's because DP Eurasia margins are better than the company's own margins, and the net profit came in higher by about 600% again because of the 170 crore exceptional that we're talking about. In India, the revenue came in at 1330 crores. The street was working with a number of 1327 crores. Margins, while they were slightly better than expectations, they were near record low for the company. That's because they've cut off the delivery fee, the delivery charge that they would have, and also offered some low-priced variants as well. They've added 67 new Domino stores. The street was working with a range of 60-65. But the most important part, the like-for-like growth has now turned positive, 0.1% versus street expectations of 0 to -3%, and turned positive for the first time in the last 4 quarters itself. In fact, not just that, if you take a look at the entire industry, which has reported numbers so far, Jubilant Foodworks' 0.1% LFL growth is a lot better than KFC India, Pizza Hut India, as well as Westlife Food. So see some green on the stock. Let's see where it goes from there.
Okay, you've gotten all of us hungry now. Thanks, Mangalam, for that. But let's go across to Vivek to talk about Torrent Power. Vivek, good morning.
Well, good morning. Again, slight miss when you're seeing Torrent Power as well. Slight miss against what the consensus was anticipating. So revenues higher by almost 8.5% on a year-on-year basis, coming in close to the 6,530 crore mark. EBITDA higher by almost 1.7%, 1,109, and this seems to be quite a big miss against what the consensus was anticipating. The company has gone ahead and given a few reasons. We'll come to that as well. EBITDA margins coming in at 17% versus 18.1%, again a miss of close to 110 basis points. Profitability optically much lower, down 7.6%. But remember, the base quarter, had a net gain of sale of LNG, and this is something on back of which you're seeing the profitability lower by close to 8%. Now, what is it that the company is saying? The company is saying the profitability was largely aided by contribution from merchant power sales. Now, remember, in the conference call, the company said that in the last 10 days, the company has gone ahead and started selling gas from the gas-based power from gas-based power plants in the market, and this is under Section 11. So, the prices over there will be capped. Now, apart from that, the company has also said increase in contribution from thermal generation segment from better offtake, from long-term offtakes. Again, this is something that the company has said is a positive. However, higher tax expenses is something that the company has alluded to, saying that it impacted the PAT. Now, going ahead, FY25 capex guidance at close to 2,000 crore, out of it 1,750 crore is in the license business and 250 crore in the franchise distribution area. Company has also taken an enabling provision to raise up to 5,000 crore. Expect some profit booking in Torrent Power as well today.
Okay, thanks a lot. So some profit taking on Torrent Power. But going back to Mangalam, he's to tell us about Nykaa as well as Metro Brands. Mangalam.
Well, if Jubilant Foodworks got you all hungry, then this may want you all to indulge in some retail therapy as well, because Nykaa, good performance as directed by the company in their fourth quarter update. A 28% revenue growth, EBITDA grew about 32%, so there was operating leverage playing out there. And the net profit jumped nearly 300% on a low base. 2.5 crores turned into 9 crores for the company. Internally, the gross merchandise value was up by about 32%. Beauty grew by about 30%. Fashion grew by 27%. And others, which includes men's grooming as well as some of their B2B verticals, that has grown by 68%. The only fly in the ointment was that the beauty and personal care business margins, contribution margins, declined year on year. And that is something which one needs to watch out for from the future standpoint as well, because of competitive activity. So opens in the green, but may see some sell-off. For Metro Brands, the situation has been weak for the footwear industry this year. In that as well, they grew about 7% with a 10% growth in their EBITDA. There was improvement in the margins. Net profit here for them was aided by a tax credit of 50 crores versus an expense of 26 crores. They've added 21 new stores in the quarter. They will open 225 new stores in FY26. And Fila EBITDA losses are narrowing. They are down by about 11 crores. Growing that would be extremely crucial to track.
Right, Mangalam, thanks very much for that. So we have by the way, Metro will be in focus as well. Petronet LNG is the next one that we're going to focus on. Sonal is here with the details on the numbers from Petronet. Sonal, morning.
Good morning, Prashant. Well, sequentially, the numbers were a decline, and this despite the fact that spot LNG prices were lower, which would have meant that volumes and utilization would have been higher. The company has not given any details yet on the volumes and utilization across their ports as well. But going for the numbers, revenues were down 6.5%, EBITDA down 35%, margins contracted 360 basis points, leading to a profit decline of 38%. The company also says that in FY24, their trade receivables included 1,832 crore rupees as use or pay charges. So if any client is not able to use a defined volume, then they'll have to pay charges for that. And net of provision, that is around 1,474 crore rupees. This is when the capacity utilization is lower than what was expected. These dues pertain to last 3 financial years, but the customers have not given balance confirmation towards use or pay dues. So we'll need more clarity on that. What is the receivable here, and also in terms of volumes and the utilization. But going by the PNL, it was a miss this time around.
Okay, thanks for that. In fact, we have the management of Petronet LNG joining us at 9:30 today. So do stay tuned in for that. But Gland Pharma is also on our radar. Ekta is here to tell us why. Ekta, over to you.
Well, it's going to react to its Q4 numbers. Now, interestingly, Gland Pharma, the numbers, if you look at it and you didn't have an estimate, it looked very good. But compared to its estimates, it sort of came in below that. So revenue was at around 1,537 crores. The street was anticipating 1,616 crores. which is a growth of over 100% year-on-year. Margins 23.3%. There were some estimates going up to 24 to 25%, but it's an improvement on a year-on-year basis. And the profit at around 149.8 crores versus estimates of over 200 odd crores. Now, USA, what stood out is that there was a sequential improvement. So it was up 7% Q on Q. Their other core markets, which is Canada, Australia, New Zealand, saw Q4 growth of 58% year-on-year and 51% Q on Q, which was good. India was, however, sluggish, so it was down year-on-year and Q on Q. Now, some of the key things which will weigh on Gland Pharma is Senexi, which is one of their recent acquisitions. The revenue was down 18% Q on Q. There was an EBITDA loss which widened as well, and the management says there's no near-term pickup in Senexi as well. The legacy business revenue run rate, however, improved Q on Q, and their recently launched drug, Halavan generic, should probably aid Gland Pharma. So that could probably assuage a little concern. And the base business for Senexi, just to give some numbers, was up 50% year-on-year. The China market progress has been slow, so maybe that would probably also weigh on the street. Expect the Senexi acquisition to probably be the key reason why Gland Pharma would be in the red today.
Okay, all right. Ekta, thanks for that. Well, I'm looking at Ramco Cements and I expect the stock to react positively. Even if it opens up in the end, I'm expecting it to recover from the low point of the day. And here's the rationale. If you look at the numbers, the top line was better because they sold a high amount of volumes. The problem was realizations contracted by close to 8% on a sequential basis. But top line, no worries on that front. The absolute EBITDA number as well came bang in line because there's a beat on the top line, which came down further to the EBITDA number. However, on the margin front, there's a small miss out there. So that's why you did have the EBITDA per ton coming in at sub 800 rupees per ton. But I think that's par for the course. The company is taking measures with regard to the green power focus. They have scaled that up to close to around 34%, or they're talking about it going to 42% in the coming year. So high use of green power is helping them in terms of the power and fuel costs. The other positives are the net debt number has come down by close to around 100 crores, which is a positive. And the second factor is, earlier they were talking about a capex plan of 1,700 crores for FY25. Now they pulled back a little bit to around 1,200 crores. Or the street will take this positively. And because of all of this, I expect the stock to open up in the green. Keep in mind, last 1 year, the stock has moved nowhere. In fact, it briefly went to around 1,000 rupees and came off from there. So we'll keep an eye out on Ramco Cements. But Upasana is joining in to tell us about Garden Reach. Morning, Upasana. Tell us more.
Strong set of numbers reported by the company, revenue and PAT reaching new highs. Now coming to company's Q4 performance, the revenue has seen a growth of 69% on a year-on-year basis. Margins have expanded sharply from 3.4% to 8.9%, and PAT stood at 112 crores versus 55 crores on a Y&Y basis. Now coming to company's yearly performance on FY24 basis, the revenue has seen a growth of 40% and margins have expanded sharply, that is 70 basis points, and stood at 6.5%. Now, company says that it is confident of growth in coming years that is backed by the strong order book that the company is witnessing, and it has also highlighted that the ongoing projects are at a maximum revenue recognition phase. More orders are also in the anvil in the upcoming years, is what the company has said. So, all in all, we are seeing a strong set of numbers coming in from GRSC.
Okay, thanks a lot for that. Here's a quick recap of our top stocks. Stocks with positive news flow: Jubilant Foodworks, Nykaa, Metro Brands, Ramco Cements, Garden Reach Shipbuilders. While stocks with negative news flow: Power Grid, Sun Pharma, Torrent Power, Petronet LNG and Gland Pharma. Manisha Gupta is joining in now for a roundup of all the action from the commodity markets overnight. Manisha, hi, good morning.
Hi, good morning, and thank you for that, Sonia. Well, I'm looking at a profit-taking board when it comes to commodities. I'll start with the crude oil prices, where we have seen a decline on surprise rise in the U.S. inventories. Now, the markets are waiting for the OPEC and allies meeting that is on 1st of June. So ahead of that, there's going to be some choppiness into the markets. But it's all about the U.S. Fed minutes, which says that there's not enough push for rate cuts given the current inflation backdrop, and that has led to a much-needed profit-taking, perhaps, in case of commodities. So we've seen gold prices decline 2% overnight. Silver fell 3%. In the metals as a sector, we've seen copper prices decline by more than 4%. Zinc and aluminum have declined 1.5% to 2% as well in the overnight markets. There is also some strength in the dollar index overnight, and that seems to be weighing on. So as far as commodities go, well, today in Asia, it's profit-taking across board.
Okay, all right, Manisha, thanks very much for that. We'll come back with more as we go along. We'll take a break here. Deepan Mehta of Elixir Equities will be with us in just a bit from now. Stay tuned, that conversation will sort of shine the spotlight on lots of stocks which are moving and which will move on the back of earnings. Stay with us.
Welcome back. You're tuned into Bazaar Morning Call. Well, as promised, we have Dipan Mehta, Director at Alexa Equities, who joins us on the show. Hi, Dipan. Good morning and good to see you. Well, I wanted to ask you about the stock of the final hour of trade yesterday. Sun Pharma, the street first looked at it. They liked those numbers and the stock ended virtually at the high point of the day. But now we have the con call details as well. Your view on the stock at these prices?
Yeah, Nigel, good morning and thank you for having me on your show. See, I think Sun Pharma has a great long-term story and they are following a differentiated business model, which means they are focusing on specialty products. And of course, there'll be some speed bumps as they go along. But end of the day, it's a very sound strategy in a situation where a lot of the markets, the formulation business is getting highly commoditized. And on the whole, I think that once they have more product launches and they do geographical expansion of those products as well, this could be a sustainable growth momentum for the company. And eventually, I think investors will start paying even higher valuation for such a business. So I'm very positive on Sun Pharma. Disclosure, we and our clients are invested in it. Valuation wise also it's reasonable. And I think that they're getting a nice upside at present because of a certain situation in the US generic market where price erosion seems to have got a little reduced as compared to maybe 2-3 years ago.
Okay. Dipan, hi, good morning. I wanted your thoughts on Jubilant Foodworks because finally after 4 quarters, Domino's growth has, improved. So I think that's something that the street perhaps will like. But your thoughts on the numbers?
Yeah, good morning, Sonia. But same store sales growth is flat. And a lot of the growth has come from new store openings. And there's only so much of expansion that they can do. We really like to see same store sales growth to improve. Of course, they keep saying that because they're adding stores closer to the existing ones. Therefore, the SSG is not as strong as it expected. But nonetheless, I think it's a good story. But look, a lot of the positives have got captured in the stock price. It trades at a very rich price to earnings multiple, which perhaps doesn't justify this kind of a high PE multiple. So I would just say wait and watch as far as Jubilant Foodworks is concerned. And end of the day, I think, it's basically a single product company. And that also is a bit of a risk factor.
What about Nykaa? Because, the performance was good. I mean, revenue growth of almost 30%, EBITDA up 32%. But I think this is something that the street knew, right? They gave us the updates a couple of months ago. Your thoughts on this stock?
Sorry, I missed the name, Sonia.
Nykaa.
Nykaa, yeah. No, I think it's following through on its business plan and it's executing pretty well, I think. The entire category is growing pretty well and we are seeing a lot of traction over there. But, I don't want to buy a company where profits are as minuscule as they are. They're just about breaking even. We want to get into consumption-related businesses where there are solid profitability. It's getting over there, but it's not yet there. So I would also place Nykaa on hold for the time being.
Okay. Dipan, hi, morning. Just coming to you, but here there's two sort of deals which are taking place. One is a QIP, there is a block. Abhishek is here with details on Keystone Realtors and Star Health. Abhishek, morning, take it away.
Morning, Prashant. So sources do tell us that Keystone Realtors have launched QIP. The base deal size is about 800 crores, which can be upsized to about 1,000 crore. Now, the SEBI, the indicative floor price that they have set is about 660 per share, which is at a discount of 9.6% to yesterday's closing price and about 5% discount to SEBI's floor price. Equity dilution would be around 10.6% due to this QIP. Star Health, CNBC-TV18 news break has been confirmed. Block deal has been launched. $266.3 million deal has been launched. We had reported that deal will be in the vicinity of $250 million to $270 million. Block deal is priced at about 530 to 538 per share. We had mentioned that the price would be around 530 to 545 per share. Now, APIS, Madison, that is Mio, as well as ROC Capital are the sellers. Mio Star will have a lock-in of 120 days post the stake sale for their residual stake in the company. Mio held about 4.6% stake, APIS held about 2.6% stake, ROC Capital held about 1% stake in the company as of March 2024. ICICI Securities is the sole broker or the banker to the deal. Back to you.
All right, Abhishek, thanks very much for that. So keep an eye out on these two names as well. Dipan, just a quick word on Medanta, if you have a view. Stocks down some 15% in 2 days after results. Do you like it? You track it?
No, Prashant, it's a new listing and I'm just waiting for the stock price and the performance to settle down. but generally very positive on hospital companies. And these are secular growth stories because healthcare consumption, healthcare costs, and healthcare spending is going to keep on moving up in a structural way as and when there is more awareness. So generally positive, but not had a look at Vedanta that closely.
Okay, well, let's focus on the infrastructure space now. And Dipan, I want your thoughts as well, but we have someone who tracks the space. Ankita Shah, who's the Vice President Research at Elara Capital, is with us. Ankita, thanks a lot for joining in. First, if we can just start by telling us what your overall call is on the infrastructure space. What is the stocks that you're most bullish on now? And then, of course, we'll get to individual names as well. But what's the overarching view now?
Yeah, so we are very positive on the infrastructure space. If you see last year, FY24, the awarding activity has been muted. But post-elections, we're expecting the order awarding to pick up significantly on the government orders. But in the meantime, state governments have been very active. Recently, MSRTC has announced a lot of new packages that are opened up, and multiple infrastructure companies have emerged as L1. Like PNC Infratech, HG Infra, NCC, GR Infra, which are could be key beneficiaries of these project awarding. So, in the absence of central government orders, state governments and some private sector orders are also continuing. And post the elections, a lot of ministries have been working on a 100-day plan post-election, which we believe could lead to further boost in new project awarding going forward.
So you mentioned a couple of stocks, right? And we had them in focus yesterday as well. Let's talk about them. PNC Infra, I think total orders worth 5,000 crores is what the company is looking at. From this price, what kind of stock price upside and earnings upside are you factoring in?
Yeah. So overall for the infrastructure space and the key companies that are in discussion, we are expecting at least a 20% earnings growth on the current numbers. However, given the buoyancy in order awarding pickup, we expect a lot of these companies to raise the guidance in terms of new project awarding going forward. If that happens, then the visibility on new projects improves and the earnings upside could be higher than that. But currently, we are working with approximately 20% earnings growth over the next 2 years, FY24 to FY26.
All right. Hi, Ankita. Good morning. Nigel on this side, and good to see you. And I want to ask you about the big boy, L&T. They came out with their set of numbers. The street didn't like their guidance, I think, and even the margin miss. Your view on the stock at current prices?
Yeah, so L&T remains one of our top picks in the space. Despite global headwinds last year, I think they reported very good performance for FY24, on inflows, on performance on the core ENC side, net working capital improvement and ROE. So on these fronts, they have delivered well. On this high base, the growth pace, the rate of growth is expected to slow down, and which to me, I don't think is a surprise. So we believe with the strong order book that they have, almost around 5 lakh crores of order book is what they are sitting at. It's almost a 3 times book-to-bill visibility. We believe the momentum is likely to continue. Also, the order prospect pipeline is much better versus previous year for the domestic markets. So when last year the international markets contributed to the inflows, I think this year domestic will pick up significantly for them, and that should help the momentum to continue going forward. So we remain positive on L&T.
Got it. Ankita, just one thing. Across your coverage universe, if you can just name the top 3 recommendations from your side.
So among the large cap space, we like L&T. Within mid caps, we like HG Infra, PNC, and NCC are the stocks that we like. Reason being, not just they are sitting on good order book and leverage position, but also being diversified in nature. They are not dependent on any one particular segment to do well. They can get orders from multiple sectors. That's all.
All right. We'll leave it there, Ankita. Thanks very much for joining us, and we'll have you back soon again as we get past that election verdict. And I think infrastructure is going to be really top of the list where market expectations are concerned. But let's get back to the market and how we're set up. Anuj is standing by with exactly that. Anuj, morning.
Morning, Prashant. And you know what, I think this is GIFT Nifty is one of those days where perhaps not giving you the best indications. My sense is you could actually have a good 100-point gap up today. The market's got almost a double bonanza today. The RBI dividend, blockbuster dividend of 2.1 lakh crore, while the expectation was 1.05 lakh crore. I think you would have analyzed it threadbare, but this alone cuts the fiscal deficit by about 20 basis points. And I think the second big positive is crude prices. Look at where we are now at $81. I think that's another big positive for the market because, just a few days back, we were almost threatening to cross 90. So that's a big positive. Now, what does that mean in terms of the market levels to watch out for? Considering today is the weekly options expiry on the Nifty, the first resistance is 22,675 based on the options, and the bigger resistance is 22,795, the all-time high. The support comes in at 22,465 to 22,483, which is yesterday's low and also the options base, and the bigger support is 22,385, the 20-day exponential moving average. On the bank Nifty, where we had that last hour move, the first support is 47,400 to 500, and then 47,200 to 47,300. On the upside, 48,100 to 48,200 is where you see the first resistance, and then 48,400 to 48,500. I leave you with the quote of the day, and today is Buddha Purnima, so currency markets are closed for that. But Gautam Buddha, of course, has a big influence on my life. I go a lot by Buddha's teachings, and one of the big teachings is each morning we are born again. What we do is what matters most.
Okay, live in the moment, right? Thanks a lot for that, Anuj. Very helpful there, both on the markets and some life lessons as well. Let's do one thing. Let's take a quick commercial break. On the other side of the break, we will talk to our technical experts, Kush Bora and Sudarshan Sukhani, for some technical trades. Stay tuned.
Okay, welcome back. There's 12 minutes to go for the pre-open session. The GIFT Nifty still indicating about a 30-odd point higher start. Kush Bora is with us, and so Sudarshan Sukhani, as we sort of run through technicals and levels and what you should do. Gentlemen, good morning. Good to have both of you here. Thanks very much. Kush, how are things set up? The positives are there and kind of sort of slowly piling in. Nothing very large, but incrementally, it's not bad. And once in a while, you get something positive. But the market here, of course, has been a little hesitant in taking all of that on board straight away, and that's understandable. What's the setup on indices before we get to stocks?
Hi, Prashant. First up, a very good morning. Well, I think this is exactly the kind of discussion we had a couple of days ago, perhaps even yesterday as well, that, the texture of the market is very clearly buy on dip. Any dip that you get towards those support levels of 22,500, 22,400 should be bought. Since the IPL is towards the business end, let's just take a few parallels from there. Nifty, like RR, continues to find ways and means to find form and just, bounce back, while Bank Nifty, despite a valiant effort, hasn't really been able to cross the line. I think that texture will continue. There is a short covering rally that we see due on the Bank Nifty. It's just a little difficult to time as to from where will it come, but we believe that 47,400 should act as a support zone. And perhaps we could see a short covering rally on the Bank Nifty, but I won't pay for that. I will continue to buy the dip on the Nifty.
Okay, all right, Kush, morning. And since you're talking about IPL, who do you expect to lift the cup?
Hi, Nigel. Let me try and answer that also in the stock market parlance. Like Sunil Narayan, I believe CDSL will continue to outperform, and 2200, 2250 will be the target, 2135 will be the stop loss. And perhaps like Venki Iyer, PGEL, PG Electroplast will also blast, and 2425, 2475 will be the targets, and 2330 will be the stop loss on this one. So there's your answer, I suppose.
All right, so both these two we'll be tracking. PG Electroplast will have the management with us in the next 1 hour or so. But Kush, who will win the World Cup? Who will win the IPL? Not the World Cup, the IPL. Do you expect KKR to come out trumps, or do you think,
Both the players I mentioned are from KKR, so there was a slight hint for you there.
KKR, got it. All right. Well, let's get in Sudarshan. Sudarshan, how are you approaching trade today?
Good morning. The trade is the same. The markets are in an uptrend. So far as the Nifty proves it, otherwise, we'll assume the uptrend continues. If that is so, then stay long and buy on dips. Now, intraday volatility will continue and persist. That's at least till the election results. So accept that every dip in the market due to volatility is a buying opportunity, not an exit opportunity. Now, the Bank Nifty has been underperforming. but that means nothing. It could easily catch up any time. So the trade is simply pay more attention to the Nifty, but also consider keeping the Bank Nifty in your long portfolio. Buy every dip.
Okay, buy every dip. What about individual stocks, Sudarshan? What are we looking at this morning?
Well, GMR Infra is a buying opportunity with a stop under 79. Granules is a buy with a stop under 397. That big boy Reliance is now coming out of a decent correction. That's a buy with a stop under 2800. And Sun Pharma, which has been underperforming some of the other pharma stocks, may catch up. Buy with a stop under 1477. All buying.
Okay, all right. Thanks a lot for that, gentlemen. Well, for the time being, I think we can get in Chandan Taparia as well, derivative and technical analyst at Motilal Oswal, who joins us on the show. Hi, Chandan. Morning. What strategies that you have for us?
Good morning, Nigel. Thanks for having me. So we have seen sustained buying interest in the broader market, especially the Nifty headed towards 22,600 zone. Supports are gradually shifting higher, and we believe that till it holds above 22,400, this momentum could extend towards the new lifetime high and rally towards 23,000. Overall, we believe that 22,222 could act as a positional support, and this rally can even head towards 23,500 once the results are over. But as of now, we need to go with buy on decline with support of 22,400 for an upside move towards 22,795 and higher levels. Looking at the Bank Nifty index, that is slightly underperforming, but holding well to its rising trend line. It has to hold 47,500, then only we can see an up move towards 48,250. So more bullish on the Nifty, but only concern is the India VIX that is now hovering above 20 marks. So if volatility cools down below 1680, then only the smoother ride will be there. But as of now, as per the price pattern, we believe that momentum of the market could continue to hit towards the new lifetime high. Now, looking at the stock specific, first that is buy on Coal India. We have seen that stock has been making higher top, higher bottom. Recently, it has given a consolidation breakout on the daily and the weekly chart. We have seen the put writing and the PCR of the stock has jumped higher. So expecting further rally towards 525, one can buy with support of 490 level. Second trading idea, that is buy on Oberoi Realty. We have positive on the selective realty counter, and Oberoi Realty has seen the open interest addition of around 35-36% in last couple of days. Major trend is positive. Technically, it has given a breakout from its pole and flag pattern. So expecting a rally towards 1850, one can buy with support of 1735. Last trading idea, that is buy on Auto Ancillaries, buy on Motherson Samvardhan. Here we have seen support of 50 DEMA. It has given a consolidation breakout. Major trend is positive. Built up of long position is clearly seen by 8 to 10%. So expecting a run up towards 141, one can buy with support of 129 in Motherson Samvardhan.
Okay, let's take a quick break on that note. Thanks a lot, Chandan. Have a good day. That's Motilal Oswal Financial Services with their views on the market. We'll come back after the break with the pre-opening rates. Also, we'll have Sonal Verma of Nomura and Samiran Chakraborty of Citi to discuss the RBI Bonanza dividend payout. Stay tuned. Welcome back. We have about a few minutes before the pre-opening rates kick in, and then about 15 minutes before the market opens for the day. Dipan Mehta is still with us. Dipan, you know, the big talking point, of course, globally is Nvidia, right? And the kind of surge that it's seen post its numbers. But sitting here in India, how does one participate in this rally? I mean, there are many mutual funds that give you an exposure there. But what would your best advice be?
See, Sonia, the best way to play US tech and tech and overall US economy is the Indian software companies. Of course, I think this quarter numbers have been a bit disappointing. In a way, the quarter is a washout because more or less I think results were flat to declining. But there is a ray of hope in the form of higher order book position, which means that once things start to improve over there, execution will immediately pick up on the Indian software company side. And that could lead to very good numbers, maybe December quarter, March quarter or so. And this entire AI and cloud, I think that's another going to be another structural spending increase for all Fortune 500 companies globally, and that's going to benefit Indian tech companies. And these are companies which have got great shareholder-friendly policies in terms of distribution of profits and great operating leverage businesses as well. And valuations are still reasonable for these companies. So if you get a few of the even large cap or mid cap software companies, I think that's the best way to play this technology surge and increase in tech spends globally.
Okay, all right. Deepan, I wanted your view on the insurance space. You know, HDFC Life, there's a Motilal Oswal note that's come in early this morning, and they're talking about HDFC Life. They've upgraded the stock to buy from neutral. They're saying that the stock is down 20% in the last 5 months, and the de-rating of stock has been steeper than expected. And the valuations they highlight at around 2.2 times, well, it's the lowest in January 2023. Any view on this one, HDFC Life?
See, Nigel, I think insurance has done very well in this quarter overall. But, you look at LIC, and when I look at LIC, I don't feel like looking at any other insurance company. It's available at below its enterprise value. The way the stock prices have moved up, LIC's portfolio has done exceptionally well. And a lot of the gains and increases in the enterprise value do come from portfolio gains. I think in terms of actual performance also, it is coming through pretty well. It's able to hold on to its market share. And valuations, I think, are very, very attractive. So, and PSU is the flavor of the season, has been so for the last 2-3 years. So from that point of view, I think LIC is the best bet in the insurance sector. A disclosure we and our clients are invested in, so our views could be biased.
All right. Deepan, you may want to listen into the next discussion as well, and we'll come back to you in a bit. This is, of course, we're talking about the bonanza for the Government of India from the Reserve Bank of India, which has announced a record 2.11 lakh crore surplus dividend for FY24. In a conversation with CNBC TV18, the Finance Secretary, TV Somanathan, comments that RBI's dividend will prove to be beneficial for the government and the government will, of course, pragmatically take future steps with regard to fiscal policy. Listen in.
Cash is a short-term thing. The revenue is important. Cash will fluctuate based on expectation. Cash is not something which can be managed, or I can't tell you how cash will be managed. But I can tell you that this dividend is good for the revenue of the government. It's good for the fiscal position of the government. It's always good. All revenue is welcome. We will only buy those bonds back which come at yields which we like. So it's not this is not like when we are trying to raise money. There is no failure of the buyback. We have put out a target amount. If it happens, it happens. If it doesn't happen, it's okay, no problem. If conditions are tight enough, people will take the buyback. If they're not taking the buyback, then conditions are probably not very tight. So, I mean, that's a matter for the other side to decide on how much they want to buy. It would be definitely 0.2, 0.3% higher than what we expected as receipts.
0.3%
of
GDP.
The number.
Okay. Of the GDP.
Yeah. Is the delta.
So 0.3%, that's the Finance Secretary himself saying 0.3% of GDP is the extra sort of delta, he said, fiscal space which the Government of India gets because of this bumper dividend. Sonal Verma is with us, Managing Director and Chief Economist, India and Asia, ex-Japan at Nomura Financial Advisory. We also have Samiran Chakrabarti, Chief Economist for India at Citi, who's with us. Sonal, Samiran, great to have both of you here. Thank you very much for your time. Samiran, if I can start by asking you, I mean, how do you read this? How will this, in your opinion, I mean, this is, of course, extra fiscal space which opens up. The question, though, is how will this be put to use? So your first thought, Samiran.
Good morning, Prashant. I guess this was, to us, somewhat expected. We were putting out in our notes saying that there is a possibility that the RBI dividend will be significantly higher than what the government has budgeted for. And so that way, it's not that big a surprise for us. Yes, it means that the government has three options in some sense. One is that it can reduce the fiscal deficit, 0.3% of GDP, as you mentioned. It can utilize this money for more fiscal expenditure, whether it is capex or any sort of populism. And the third one is that there are always unforeseen circumstances because of which some of the budget arithmetic can go wrong. This just provides an elbow room to the government to stay with that 5.1% number, adjusting for those unforeseen circumstances. Now, obviously, the question that we are getting is that is going to be more of expenditure versus more deficit cut. Look, in my view, this is a one-time thing that the government is getting. If it is spent on certain kinds of expenditure, which has more of a recurring nature, which next year you cannot withdraw, then it's difficult to do it on the expenditure side. Whereas if you do it on the deficit reduction side, this is also going to be a year where we'll be flooded with more demand from FPIs after the bond index inclusion. So both the supply will be lower and the demand will be higher, means that yields can collapse under those circumstances, making RBI's job more difficult. So it's a complex problem that the government will have to deal with, but it's also a problem of plenty. So I think every government will welcome this as well.
Okay, it's a problem of plenty, and every government will welcome this. So that's the moot point, right? It's positive for the government, for the bond market, etc. Sonal Verma is also joining into the conversation. Sonal, hi, good to speak to you after a while. So it's this tough decision between increasing spending on one hand or reducing the fiscal deficit, right? Which way do you think the government would head, and what are the overall implications of this announcement?
Yeah, it's a good problem to actually have. I think we are still too early in the year actually for the government to also take a call on what to do, because in terms of potential, more expenditure as the year progresses, for instance, the subsidy amounts could be much higher than what they've budgeted, because if you look at the revenue expenditure increase, the percentage increase in FY25 in the interim budget is not substantial, so that could be higher. And similarly, the disinvestment side, last many years, we've seen a disappointment. So that could be a bit of a negative on the fiscal finances. So we're still early in the year. Government has time. Our own sense is they might therefore do a mix of all. The budgeted amount on the RBI dividend specifically, we don't know, but our own estimate is the B amount is closer to 850 billion INR. So the 2.11 trillion in RBI dividend actually is around 1.3 trillion above the budget estimate. So that's closer to 0.4% of GDP. So it's a substantial fiscal bonanza that has come in. We think the government could therefore choose to reduce the deficit marginally when it presents the final budget in early July, which is what we're expecting, but also leave some cushion for any unexpected shifts that might happen on the revenue and the expenditure side. Outside of this, there will be implications on liquidity as government starts spending. This is more of a medium-term issue. And given the significant amount of RBI dividend, the extent of reserve money that the RBI needs to create through expansion of its domestic or foreign assets will be that much lesser. On the bond side, this is actually going to add to the cash surplus that the government is sitting on. This could very well go, above 5 trillion INR, and therefore some sort of a reduction in the borrowing, could happen. Again, the details of this are likely to get announced in the budget. And as Somiran was saying, it's really positive from a demand-supply environment. So our own forecast is that the 7-year as well as the 10-year bond yields could drop to 6.75%.
Wow. So more downside here. Of course, today markets are shut. Otherwise, we would have perhaps seen some more reaction after yesterday's sharp fall. Samiran, the market did respond, right? Yields fell sharply. So, you said that, you were expecting it. The market liked what it saw. So if you want to sort of comment quickly on that. So, and as Sonal is saying, that it does, make it easier for the government to meet its fiscal consolidation roadmap in that sense, but it also gives the opportunity for them to alter the budgeted receipts, expenditure, etc. On the on that front, on the second part, do you think we should start from and this is of course more in line with what markets are looking at, the infrastructure sort of thrust, roads and capex, etc. What about taxes? The lower end of the economy has been hurting. Maybe something on personal taxation, lowering it a bit to boost that. I don't know if that's going too far, but Samiran, any thoughts?
So Prashant, on a lighter note, till the actual budget is announced, everyone will want to see what he or she wants to see. So on the bond market, people will want to see a lower fiscal deficit. So bond markets will react positively, thinking that the government will actually reduce the borrowing numbers. On equity market, if you are a holder of a capex play, then you would be wanting the government to do more of capex out of this and may react on it. if you think that actually by reducing taxes, you can stimulate consumption, which has been a bit weak in recent times, then you might think that that's the way the government is going to do. But to be honest, no one knows at this point of time exactly how the government is going to approach this, the new government. So I'm not going to venture a particular guess on exactly which way things will move. But one thing is very clear, that suddenly the budget will become more interesting than what we were thinking before. What the initial thought process was that the government will do only somewhat marginal tweak to the interim budget numbers, because the interim budget itself was quite detailed. Now, with this more than 1 lakh crore extra kitty, the budget maths will have to be reworked, and it will become very interesting, and the market will keep on speculating till it's actually announced.
Okay, well, something for the market to speculate, right? Thanks a lot to both of you, Samira and Sonal, for joining us this morning and talking about the macro setup. But let's do one thing. We have the market which is opening, the pre-opening that has kicked in. And a couple of stocks like Nykaa, Jubilant FoodWorks, Metro Brands, all in focus after their numbers. So very quickly, let's get the stocks up on board. Nykaa is up 2.5%, Jubilant Food up 3.5%, and Metro Brands as well. Good earnings coming through. But let's go across to Sudarshan to find out what's the 9-10 call of the day. Sudarshan, over to you.
Consider buying Granules with a stop under 397.
Okay, and Ramco Cements is what you're looking at, Nigel?
Well, that's right. Ramco Cements, the big underperformer of the last 1 year or so. From the highs of around 1,100 rupees, the stock has corrected considerably, holding at around 780 rupees. And that's closer to around the 52-week low. Now, the reason that I said earlier this morning as well that I expect the stock to react positively is because those numbers are more or less in line. The top line was a little bit better because of higher volumes. And because of higher volumes, you had a top line beat. That beat on the top line came down to the EBITDA number. So though the margins are a little bit of a miss, the absolute EBITDA number is in line with what we're working with. So I take that positively. Remember, they're working on various cost efficiencies. Though the realizations were down by close to around 8% on a sequential basis, they focus on green power. That's helping them. It's up to the mid-30s. They're expecting it to go to around 40%. And that's why, in fact, things are looking up for them. Now, on the net debt front, they've reduced it by close to around 150 crores, which is a positive. That's something that the street will like. And in addition to that, the capex plan, earlier they were saying for the coming year, the capex plan is at around 1,700 crores. They've scaled it down to around 1,200 crores odd. Remember, they're on their way to becoming a 26 million ton unit. So with the capex plan being scaled down, I think in the near term, the street will like this. And given that the stock has bombed out, expect the stock to do well from here on, at least for today's trading session. Well, Mangalam joins us to tell us about the other big winner from the F&O stocks, Jubilant FoodWorks. Mangalam, tell us more.
Well, the stock is higher in pre-open. That's because, the numbers were aided by the consolidation of the international business. The Indian business internals look good as well, despite, margins being near record lows as well. The revenues coming in at 1331 crores, largely in line with the street expectations. EBITDA margins at 19.1%. Even if they're low, they're better than what the street was anticipating. The like-for-like growth has turned positive after 4 quarters, and in fact, one of the best that we've seen in the QSR space itself so far. Internals were pretty strong. Delivery channel actually grew 12% for the company in the 4th quarter, and the like-for-like in delivery was actually up by about 7.8%, telling you that, dine-in is the problem and not delivery. Delivery is now at close to 68% of sales versus 63%. Who eats at a Domino's store inside anyway? They added 89 stores in India across all brands, and the new brands contributed about 1.4% to their sales. International business, for 2 months of the consolidation, the revenue addition was 217 crores. The EBITDA margins were close to around 26.5%. So that business, as it scales up, will only be margin accretive for the company. And they've guided for 180 new Domino's stores being added in India in FY25, 50 Popeye stores and 25 Hong's Kitchen stores as well. So all these are factors which are working for Jubilant FoodWorks.
Actually, you're right. Mangalam, the dine-in experience has been a bit compromised, right? Because the other day, actually, I passed by a Domino's outlet and there were only delivery boys sitting inside there waiting for the order to deliver. So I guess it's one again pitted against the other, but dine-in experience definitely compromised there. But thanks a lot for that. Vivek is joining in. Gland Pharma and Sun Pharma also on our radar. Vivek, over to you.
Well, good morning. Just stepping in for Ekta. Now, talking about Sun Pharma, last evening they had the call and, Ekta's collated the top highlights. Number one, FY25, the company is expecting high single-digit consolidated top-line growth. Now, the only concerning part is the company is not given any EBITDA margin guidance as far as FY25 is concerned. Now, along with that, they're expecting R&D spends to be almost 8 to 10% of the total sales. And in FY25, the company is also planning to launch the specialty drug for alopecia. Now, along with that, the company is saying they're also working towards GLP-1 drugs. Now, brokerages, expect FY25 to be slightly subdued as far as Sun Pharma is concerned. In fact, CLSA has downgraded the stock to an underperform rating. They're saying that downgrade is due to lack of limited upside and also lack of near-term triggers. Nomura as well as Jefferies too are expecting a subdued FY25. Now, coming to Gland Pharma, Goldman Sachs says that the management maintained their medium-term top-line guidance of mid-teen base biz growth. However, when you're talking about sensex, the CDMO arm, the revenues are down almost 18% sequentially, and the company has said that the China market progress is lower than expected. So expect some softness as far as Sun Pharma is concerned. Gland Pharma will be interesting to see given what the management committee has come in.
All right, Vivek, thanks very much for that. So Sun and Gland are the other two which are going to be in focus. Guys, we were talking about the NVIDIA numbers, right? So obviously tech benefits and all of that stuff. But I was just reading that maybe another area, and this is actually true, because AI takes so much power. So for example, ABB recently said that if you ask ChatGPT something, the power required for ChatGPT to throw up an answer is 10 times the power a Google search, a simple Google search takes. So NVIDIA results show that the AI sort of boom is well and alive.
Power.
So power is a theme,
Demand.
which is, and that's where the big demand for, actually it's all related, right?
Yeah.
Copper, transformers.
Silver.
Silver. So, it's of course a second level kind of impact, but it nevertheless, I think, is a big reason why, the demand for some of these industrial metals is being talked about in such great sort of shape and form. The first rates will start to come up, and we'll kind of talk to Hiren Ved, who will be with us in just a bit from now. So the first rates and reactions to earnings like Sun, etc. Jubilant FoodWorks, I think I saw an upgrade from Spark, which is of course I think Aventus now, on Jubilant FoodWorks. No big increase in price target or anything, but I did see an upgrade. And a few others as well to begin the day. So the first rates are coming up with the Nifty and the Sensex absolutely flat, nothing. The Nifty's got about 15, I think we saw some red as well, but 10 points higher on the Nifty. The Sensex is up about is down about 20 points. So it's kind of like a traffic light, blinking red and green, nothing at all. And you've got the mid-cap index, which is up about 0.5%, 230 points higher, 52,383. The small cap index will also come up. So I think the broader market, at least to begin the day, has got it much better. And I think we'll have to pick up from there. So, the broader market doing much better. The Nifty bank is up 1/3%. Financials, banks, because of the big drop in yields. Sonal Verma of Nomura was saying that she's seeing the 10-year here dropping to about 6.75. So maybe further downside there. So banks are the other thing to watch. But on the Nifty, there's nothing. 10-point change. But it's all about stocks. Sonia's got those. Sonia.
Thanks a lot for that. So since the market is very quiet, right, I thought let's focus on individual stocks and the big moves that we're seeing. Nykaa is the one that, I want to kick off with. Almost a 3% rally on Nykaa now. Very good performance. Is revenue growth of 30%, EBITDA growth of 32%. So the street definitely likes that. Jubilant FoodWorks, we were talking about how Domino's has picked up pace. Its growth has turned positive for the first time in 4 quarters. Jubilant FoodWorks is now up almost 4.5%, has hit that 500 rupee mark. Metro Brands is the other one. Good set of earnings. The EBITDA is up almost about 10.5%. Margins have picked up substantially on Metro Brands, and the stock is factoring that in, 4.5% higher now on Metro Brands. Now, Sun Pharma is the other one from the frontliners that I'm looking at. Let's just get Sun Pharma on board. The reason the stock is under pressure is because the company has said that FY25, they expect high single-digit consolidated top-line growth. So there's only a single-digit growth that they're looking at on the top line in FY25, and hence the stock is coming in for some profit-taking. Gland Pharma is the other one. The Q4 results were below what the street was estimating. The India business, in fact, was revenues were down almost 19%, but the stock is tearing away right now, 7.5% higher on Gland Pharma. So there's definitely something that the street likes. Now, very interesting, a stock that has been a huge underperformer is HDFC Life. But this morning, Motilal Oswal has upgraded the stock to a buy. They have raised their target price to 700 rupees a share, which is a big upside to the current market price. Let's see how this one does, because it's been an underperformer for years now. So does it it start to pick up? Time will tell. Zomato is the other one. Axis Capital has initiated a buy on the stock. They have a target price of 254, so I'm watching out for Zomato very closely. Gujarat Pipavav is the other one. Good operational performance this time. In fact, there's a big margin pickup for Gujarat Pipavav. EBITDA is up about 21% as well. Let's head to PG Electroplast. The revenues have gone up almost 27%. Margins have picked up year on year, so the street definitely likes what they're seeing on PG Electroplast. And Ramco Cements, Nigel was telling us about how the net debt has gone down by 100 crores for Ramco Cement. The Q4 numbers are largely, above street estimates, so the street likes that, 2% higher there. So that's the exhaustive list of stocks in focus. But let's get our focus back on the Nifty. Not too much happening, which is a good thing actually. The market has had a fair amount of rally, 650 points since the lows in May. So the Nifty is hanging tight above that 22,600 mark. Back to you.
Thanks a lot for that, Sonia. Garden Reach Shipbuilders, that's the stock of the morning, up close to around 13% as we speak. Massive uptick is what we're seeing on that name. So big move on Garden Reach. Another one that's moving well is Macrotech Developers, up close to around 5% as we speak. Solid up move is what we're seeing out there. I'm not sure what's the news flow, but that one as well, one of the top volume movers in today's trading session. Besides that, a few more stocks. HEG, their numbers were weak, multi-quarter low in terms of their margins. They've announced a demerger, though we'll have to understand in greater detail what's the reason for that. So that stock, in fact, is down close to 5.5%. In the next 20 minutes or so, we'll have the management on the channel as well. A few more losers. We have Azad Engineering. Well, that one was down close to around 4%. You have Esther Industries that's down close to around 5%. Gandhar Oil, I think that's a new listing. That one as well down close to around 5%. So a few of these names should come up for you on the screen. And, overnight, you had some kind of nervousness whether or not the Fed will be able to go ahead and, cut rates in the coming year. And because of that, you have metals that are under pressure. Vedanta, Hindustan Copper, both of them are pulling back. Remember, they've seen a big up move, but both of them have pulled back considerably. And gold was under pressure overnight. So you have Manappuram as well. That's down close to around 1.5%. Remember, the metal stocks, not a pocket for the faint-hearted. You've seen on Hindustan Copper itself an 8% move from yesterday's high itself. So just keep that in mind. Structurally, things could look good. You could have a bit of a tailwind that's playing out. But, you want to trail, if you're trading them with some stop losses, is very important. Prashant.
All right. This is the definition of a flat start, right? 1 point, less than 1 point change, 22,600 or so is where you have the Nifty now opening at. Just a couple of more names. Look at Max Estates. It's starting 10% higher. I think there were numbers which came. Volumes are very low, so keep that in mind. What else? I mean, the shipbuilders are all, I think we mentioned a few, Cochin, Garden Reach, Mazgaon. It's never one. It always usually moves as a pack. And I think that is true today as well. Loda, which is Macrotech, is up 3. Jubilant Food, we mentioned 4. PG Electroplast, 5% that is. Tata Elxsi is up 4% this morning. So 74.99, 7,500. Star Health is up about 3%, 554. You got a couple of these banks. Hitachi, which sold off, that's Power India, is up about 2.5%. And I think you've got Ashoka Buildcon, which is starting with some gains as well. I'm spotting one or two of these PSU banks as well. Indian Overseas Bank, UCO Bank, which are also coming up with decent-sized volumes for this point in the day right now. That's it. A lot of metals stocks, as Nigel mentioned, which are taking a bit of a knock. So underlying prices have been a little soft after the big run-up that we've seen fairly quickly. Let's get in Hiren Ved, who's joining us now. Hiren, of course, is Director and CIO at Alchemy Capital Management. Hiren, good morning. Great to have you with us here and good to see you here in our
Good
studios.
morning, Prashant.
What's top of mind, Hiren? Is it elections? Is it waiting for the verdict, looking past it?
Just let's get done with it, right?
How does one position for it, Hiren, if one can?
One doesn't position for, I know it's cheesy to say that, but if you're a long-term investor, you don't change
anything
positioning, based on events like that, because, frankly, while the overwhelming consensus is that there will be, stability and the same dispensation will come back. So usually long-term trends don't change so quickly based on an event, right? So we've seen that in so many elections in the past. People have kind of thought about, okay, will the leadership in the market change if there is a change in the political dispensation? Very difficult to to say that. It didn't change in 2000, for example, in the bull market of 2003 to 2007. There was a abrupt change in 2004.
But the
leadership did not, the leadership amongst the sectors didn't really change. So I guess just stay with what you have.
Let me ask you this then: if you get, it's a big event in any case. I mean, you get what the market consensus is expecting, and we're pretty much at near record highs, 200 points away on the Nifty.
Yeah.
You get that big number, and all's well on the 4th. You think the market does? It kind of keeps going like it has, the pace it has over the last 6-8 months, or you think a lot is in the price? So you think it starts something new?
Well, I think, obviously, if the results are, what the market likes, then yes, you could have a big relief rally, so to speak. I think after a few days, it will be back to kind of normal, right? And then there will be the anticipation for the budget. In terms of what happens. Well, there will be anticipation because, they've talked about bold reforms. So people are, everybody is going to think, from my perspective, we will think about capital markets, what can come. Somebody else will think, what can come as a bold reform in the budget. But it'll be interesting to see. I think on the whole, in the run-up, if the results are as per the market's liking, then I think in the run-up to the budget, we should have a pretty decent market, I would say.
In so many years of tracking the markets and elections, I haven't seen a government who is so confident of coming back into power that, Prime Minister Modi did mention that post 4th of June, you're going to see the markets rally, right? So, of course, there is this level of confidence that's there for sure.
Yeah.
But if there is policy continuity, which I think the market wants and is focusing on, then what are the themes that you see over the next 1 year that people should bet on now?
So, Sonia, it's not 1 year as in fact, I did write and author an article on money control where I showed that how leadership is looking very similar to the 2003 to 2008 bull market, right?
Wow. Okay.
Where all your cyclical sectors, autos, auto components, hotels, real estate, capital goods, power, telecommunication. These were all sectors which were the lagging sectors of the previous bull market. And they are now all the leading sectors, right? So it's quite instructive if you look at financial year 23-24, or even if you take the last 24 months, and if you do a sector leadership, right? There are several NSE sector indices. The top performing sector is real estate. Then it is, I think, Nifty Defense. Then it is the PSU banks, then it is Nifty infrastructure. None of these, the top 5 or 6 best performing sectors, were the leaders of the pre-COVID bull market cycle. And then if you look at the bottom of the pyramid, it's Nifty FMCG, Nifty private banks, Nifty financial services, and they were all the leaders of the previous cycle. They are all the laggards of this cycle, right?
So is it fair
I
to
think
assume
that leadership has changed.
No, is it fair to assume that the laggards who have now become the leaders, as you said, right?
Yeah.
That is a space that will continue to grow?
I would think so. I would think so. See, even within that, there are always ebbs and flows, right? It's like in a boxing match, even an opponent can sometimes win a round. That doesn't mean, right? So you may have a quarter or two where the FMCG guys, will come back and stuff like that happens. But when you take a slightly longer term view, I think the leadership clearly is with the more infrastructure, capex, power, capital goods. I mean, that entire cohort of sectors, I think the leadership continues to be there.
All right. Hi, Ren. Good to see you in the studio. As they have been saying, Hrithik hasn't danced as yet, because all those Hrithik, HDFC Bank and the likes, they haven't moved that much in comparison to what the gains that we've seen, say, in the real estate space. And as you were coming in, we had a flash that was up for our viewers on the screen, where Godrej Properties have sold 600 flats in Noida for 2,000 crores. Hotcakes, that sort of demand is what we're seeing. But Hiren, I want to talk about NVIDIA. Overnight, you've seen this big rally out there. and you woke up this morning to those brilliant results.
Yeah,
So
I
look-
just saw the numbers while I was walking in.
I mean, we wake up a little earlier. You know,
So what, is the stock up? Is the stock up?
2.5 trillion in terms of market capitalization.
By
up
the way,
six.
you know, Nigel, I should tell you this, that Hiren and me are neighbors. So he wakes up at the same time as us. It's just that he works out while we are walking our way to the studio. So he's, you know, running or jogging on the road.
So what's the play here in the Indian markets? And I'm looking at some of these mid-cap IT names. Tata Elxsi, case in point, is up 4.5% as we speak. You know, the AI focus is definitely picking up steam. How would you play this theme?
So, Nigel, very difficult to, unlike in the US where there are direct AI plays, right? So I think if you really look at what's happening is that right now it's the companies which are building the GPUs and the servers or what we call as the AI infrastructure layer is doing well, right? I think once that build out happens with a lag, you will find the AI applications starting to do well. I mean, every Indian software company is saying that I am AI ready with my workforce, right? TCS being right at the top. Persistent has been talking about it, a lot of them. But I think for that to be seen in the numbers and to move the needle is going to take a little bit of while, right? So I think at this point in time, it's all AI infrastructure. So the data centers, I mean, one way to play that in India would be to play the beneficiaries of the data center build out, right? Because that's the critical infrastructure that you require. And then the application software layer will come in.
Indeed.
And then, you know, how much it's like if you remember when digital was a big thing, everybody used to say, okay, my digital is 14% of revenue. Then it went to 20% of revenue. Then it went to 30%. Now you don't know what is digital and what is not, right? So I guess AI will still, right now, very small percentage. Whether it moves the needle, very difficult to say.
You know, we had somebody saying something like a NetWeb. They make servers and
Yes.
that kind of stuff. So you got to look at a very disaggregated kind of play.
Yeah, we own that with full disclaimer. But yeah, something like that, you know, there are always a few things here and there.
Yeah.
There is another very interesting company, but again, with full disclosure that we and our clients own. It is a company called Latent View.
Right.
Right.
Yeah.
I mean, they do a lot of data analytics, AI work. So there are a few disparate players here, you know, smaller plays, but there's no direct AI play like you have in the US market.
Yeah. Another way perhaps is looking at it's maybe second level, third level, but power, because power consumption required is in the order of magnitudes for AI. I mean, and everything is, if most things are going to go that way, power consumption it goes through the roof, which means, I mean, you know, this entire T&D kind of space.
Yeah, that's already happening, right? I mean,
that also ties in with what you said, industrials and
exactly, because I think power was a utility sector. Now it's a growth sector, right? People used to buy power stocks for dividend yield.
Absolutely. You know, the other space, one name that I remember you liked is Jubilant Foodworks.
Yes.
This is a few months ago, maybe, when we had spoken. Results came, I saw an upgrade as well, I was mentioning earlier from one of the brokers. You still like it? You still own it, Hiren?
We don't own it, Prashant. You know, our thinking was that, you know, they had a tough period during COVID, right? And then we thought that there will be a pickup in consumption. But we haven't seen anything great happen for the last couple of years. You know, consumers have been downtrading. You know, they haven't been going that often. And today, you know, with platforms like Swiggy and Zomato, you have access to a far larger variety of, you know, options that a customer has.
Yeah.
You know, earlier it was only Jubilant, you know, and so on and so forth. And then inflation also took away, you know, some of the pricing power from these guys. So maybe things are bottoming out there, right? And, you know, things could incrementally improve from here. But I think the trends that we are seeing in the more premiumization or the premium consumption is far stronger than what we are seeing here, right? So I think this might take a little bit much longer to revive. Maybe we are seeing early green shoots, but nothing very dramatic.
Nothing significant. Okay. Another space, just before we let you go, I wanted to mention, a lot of these defense stocks are sitting at fresh highs this morning. So that's really the space to be. BEL, there is Garden Reach, there's Mazgaon Dock, there is Hindustan Aeronautics, Cochin Shipyard, that whole lot, right? BEML as well. And it's not just defense, but it's also India manufacturing for itself and for the world, right? That whole theme is picking up quite a bit. We saw it with Dixon Tech as well. In that space, any stocks that still stand out?
So we own, we do have an exposure to Dixon. We've been having it for a couple of years now. And
it's played out, you think?
I think they can grow multifold from here, right? I don't know if, I think it's very clear, the policy level is very clear that we want to reduce our dependence on imports very dramatically, right? And I think just a few weeks ago, I think I heard the EM Jaishankar talk about how we may not have geostrategic leverage if we continue to import $100 billion worth of stuff from China, right? And if you look at the top import items, it starts with electronics. And I think this government has been very clear that you get to have the electronic manufacturing ecosystem in India. It's already happening. Apple is here. I think Google is also going to get stuff manufactured here. We're going to have all these laptops and tablets going to be manufactured here. So I think the runway for growth is still significant. And to your question on defense, I think, that continues to be a multi-year theme. Recently I met a small defense manufacturer based out of Indore. And we were just generally chatting. And he said that he's never experienced something like this. He said the Undersecretary of Defense called him and said, you guys are the 10th largest exporter of, defense products. And they make some shells for the ammunition and stuff like that. And they said, look, you've done X crores this year. Your target is X plus Y crores next year. Let us know what you need from us, what help you need from us. That razor sharp is the focus to get domestic manufacturing in defense and also to get exports get kicked off. So yes, all of this has done quite well. It's sometimes scary when you look at how the stock prices have moved. Yes. But that's exactly what happens, right? There is a doubling and a doubling and a doubling. Obviously, you need to have a long-term view. And, this is not a recommendation, but I think we are still not done with it.
Okay, still not done with it. That's going to stay with me, that despite the rally we've seen in names like Dixon Tech, there could be still lots more to go. Thanks a lot, Hiren, for joining in.
Thank you. Thanks so much for having me.
Okay, well, for the market, right, it's not bad. To be honest, the mid-cap index is really flying off the shelf now, 260 points higher. The Bank Nifty is supporting the market today. So after a big rally we've seen in the last few days, the up move continues. We have some news flow which could be negative for Lupin and Cipla though, as there is a competitor for albuterol sulfate. Vivek has the details for us. Vivek, over to you.
Well, good morning. Lupin is under pressure today. Now, what's actually happened overnight is that one US-based pharma company has received approval, and this is for an important drug that both Lupin and Cipla have as far as the US market is concerned. So, US-based Amphastar Pharmaceuticals has received the US FDA nod for albuterol sulfate inhalation aerosol. Now, remember, this is quite a big drug. In fact, according to IQVIA, the US sales for this particular drug, both the generic as well as the branded, combined was approximately $1.7 billion. Now, what actually happens is that this is a negative read-through for both Lupin as well as Cipla. Both of them get a significant portion of the US-based revenue from this particular product itself. Now, what actually analysts are saying is that the new player entering, number one, could mean that there could be loss of market share. Number two, they also expect price erosion. They're expecting price erosion anywhere in the range of 10 to 25%. On the back of that, they are expecting some pressure both on Lupin as well as Cipla. Lupin more, given the fact that it has a lot more similarity to this particular approval.
Got it. Thanks a lot for that. So that's the reason why Lupin and Cipla are under pressure. But let's focus on Petronet LNG now. The company saw its highest ever volume throughput for Q4, but their top line and profits took a hit while the margins also contracted sequentially. To discuss in detail how the year may shape up, FY25, that is, Akshay Kumar Singh, the MD and CEO of Petronet LNG, joins us now. Mr. Singh, thanks a lot for joining in. Good morning. For the full year, the overall volumes in FY24 saw a growth of 22%. Can you tell us whether you expect this kind of volume up move in FY25 as well? And what would be the volume triggers for the fiscal?
Good morning. I would like to first express my sincere and heartfelt gratitude to the CNBC team for inviting me to share my perspective on the LNG and gas market and also the company perspective. Definitely, if you see that last year, the overall volume growth of the natural gas in the country was around 17%. And in financial year 22-23, the volume was around 160 MMSCMD across the country, domestic and the LNG. But in 23-24, it has risen to 188 MMSCMD. And even the LNG volume has increased about 17 to 18% import. But Petronet volume has increased by almost 22%. And the main reason is that our Dahej LNG terminal, which is situated and connected with the national gas grid, and it has a very large evacuation capacity, unlike the other terminal. We have an evacuation capacity of almost 35 MMTPA, whereas the installed capacity is 17.5 MMTPA. So we have been able to utilize the Dahej terminal to almost its fullest capacity during the last financial year, and it is continuing in this financial year also. The basic reason for this increase is the economic growth in our country and also the urbanizations.
Mr. Singh?
Yeah.
Yes, we know the reasons. I just wanted some forward-looking numbers in FY25. What kind of growth can you see? And now that you have this, you're setting up this LNG terminal at the Gopalpur ports as well. Can you tell me what is the planned capacity there? When will it come on stream?
Yeah, in fact, if you see that the Dahej terminal is also being expanded from 17.5 million ton to 22.5 million ton. And the target is to complete this expansion by this financial year end. So it will give a huge capacity utilization boost to the Dahej terminal. Apart from that, the Kochi terminal, which is of 5 million ton capacity, is only being utilized for 1 million ton at around 20 to 22% capacity. And we expect that once the Bangalore connectivity is completed, which is expected to be by the year end, maybe by November and December this year itself, then our Kochi terminal will be connected to national gas grid, and we can substantially improve the capacity utilization of our Kochi terminal, which is only operating at 20 to 22%. The Gopalpur terminal is a greenfield project, and it will take almost 3 years' time to complete. So it will be the strategic East Coast terminal being set up by Petronet LNG. And after commissioning of Gopalpur terminal, we will be able to cover the entire country from the multi-directional south, east, and west, and will be able to serve the consumer across the country. So that will give a strategic advantage to the Petronet consumers, where we can also offer a lot of flexibility to the consumers at the different part of the country.
Got it. Right. Mr. Singh, good morning. Prashant here. And I'll come back to, and that's very helpful, the details across the 3 terminals that you've provided. And I have a few questions there. But just to get a few things for the fourth quarter out of the way, could you tell us what was the amount of inventory losses that you booked on account of the fall in gas prices, sir?
107. It was around 107 crores for the Q4.
107?
107 crore.
Sorry, you were saying? You wanted to add something there, sir?
107 crore.
Okay, no, got that. I got that number. The other thing is, what you're providing for, right, against receivables of about nearly 1,300 crores, you had said that you had provided about 450 odd crores. This is, with regards to historical take or pay revenue. And you've provided once again in the quarter. How will this sort of go forward? I mean, will you continue to provide at this steady rate over the next many quarters as well? And what is the, are you confident of sort of recovering all of this by when? Anything you can tell us there?
Yes. What has happened that during the COVID and Ukraine-Russia war in financial year 21, 22, 22, 23, and in fact 23, 24, there had been some default from our off-takers, and we have already worked out the settlement mechanism to recover this money. And as per that settlement mechanism, whatever the default were there for the year 21, 22 has to be recouped by these consumers by the December 2024. And they have provided already the bank guarantee against this use or pay charges. And if they don't utilize the shortfall volume by the December 2024, we have a bank guarantee to recover that money. Similar way for the 22-23 volumes, whatever default to the tune of 848 crores, we have allowed them to bring the default volume by December 2025. And against that, they have already given the full bank guarantee of 848 crores. And if they are unable to bring this additional volume over and above their booked capacity, we will be encashing the bank guarantee and recovering our dues. So this is a positive things which has happened in recent past, where we have secured our full this use or pay charges from all our off-takers. And this was done as a one-off measure because there was a huge problem in the country during the COVID period, and also due to Ukraine and Russia, where the LNG prices skyrocketed and consumer affordability was not there in India to consume those volumes. So now the situation is improving, and a lot of volumes are flowing in the country, and we are quite hopeful that this situation will be addressed satisfactorily in the coming months and coming year.
Okay, so you should be able to recover most of this over the next 1 year. That's what you're saying.
Yeah. By December 2025, all the use or paid dues will be settled, which was defaulted in 21 and 22.
Okay, got it. Mr. Singh, just two other points. Going back to the terminals that you were talking about, by when is this Kochi-Bangalore connectivity going to happen? That is one, because you said once that happens, the full capacity utilization will come on stream. It's operating at about a quarter of its capacity right now. And second, with Kochi, is there a tariff revision which is expected, and by when?
As you know that from Kochi to Mangalore connectivity has already been completed, and we have been able to serve the Mangalore consumers by completion of that. But only a small sections between Coimbatore and Krishnagiri, that is around 250 kilometers, is left over. GAIL is laying this pipeline, and they have already mobilized two contractors and divided the entire 250 kilometers in two sections. And this project is also being monitored at the highest level of government. That is, it is in the Pragati it has come, where the Honorable Prime Minister reviewed these projects. And there the commitment is given that by November 2024, this pipeline section will be completed. We are very closely following up, watching the progress of these completions, and we are quite hopeful that 1 month, 2 months here and there delay, this section will be completed. And once it is completed, we will be connecting to the national gas grid. And we expect that this 20% volume utilizations, capacity utilizations of Kochi will substantially improve. Maybe gradually 60, 70, 80, 90, and it can go to 100% also, because there is a demand of gas across the country.
Sir,
what about the tariff revision, sir?
I think as on today, there is no tariff revision, and it was already done 2 to 3 years back. We worked out rework out the tariff, and there is no proposal for any tariff revision of Kochi right now. But if the capacity is substantially improved, we can look into the future.
Okay, so no tariff revision at the moment at Kochi, got it. What is the outlook as far as the EBITDA per MMBTU is concerned for FY25? It's somewhere around 57 at the moment, but going forward in FY25, what is the view?
I think our tariff at the Dahej is around 62.91 for MMBTU, which is the lowest tariff across the country between all the LNG terminals. And going forward, there is a already long-term contract where there is an increase of 5% every year, and the Kochi tariff is around 89 rupees per MMBTU. Right now.
Okay. All right, we will let you go on that note. Thank you so much for joining in. Let's slip into a quick break. The market is doing fine, more than fine actually. Building on to its gains now, 85 points higher. We are very close to an all-time high on the Nifty, by the way. We're like 1% away, I think, from, or about 120 points away from that all-time high. So just keep an eye out on that. Remember, 22,794 was the all-time high level, and we're just about 100 points away from it. Looking pretty good for the market, building on to our gains. When we come back, we'll connect with HEG's Executive Director Manish Gulati and Chief Strategy Officer Puneet Anand to discuss their Q4 numbers. Stay tuned.
Welcome back. Well, this is Corporate Trader and you're watching CNBC-TV18. Well, let's focus on HEG now. The margins that did come in came in at its lowest levels we've seen all the way since March 2021 quarter. They also announced the demerger of the graphite business into a separate entity. To help us out with what went on in the past quarter and the rationale for this demerger, we have Mr. Puneet Anand, the Chief Strategy Officer, who's joining in now to tell us about the strategy with regard to this demerger. And then later on, we'll be joined by Mr. Manish Gulati, who will help us out with the operational performance. Hi, Puneet. Good morning, and thanks a lot for joining in. Well, the markets are wondering about this demerger. You know, 95% of your revenues come in from the graphite electrodes business. So why this demerger? So give us a few details. How do you see this HEG green tech business ramping up? What is the current revenues? And say in the next 3 years, where do you see these revenues going? And as of now, is it EBITDA positive, this entity that you're looking to carve out, HEG Green Tech?
Hi, good morning, Nigel. So the objective of this entire restructuring is to actually unlock the shareholder value. Since today, graphite business is EBITDA positive, and the remaining demerged business which we are doing is also EBITDA positive. It comprises of TACC Limited, which is our anode company coming on the commercial production next year. Plus, we hold 49% in Bhilwara Energy Limited, in which we are doing the merger. The objective is to, because both of these companies today have different growth trajectories, different kind of investors, we want to actually unlock the value for the minority shareholders and make it more as a value as a whole in the two pies.
Okay, Puneet, we got that. We have gone through the presentation. We got the entire working. And clearly, the promoter entity is expecting better times for this entity. That's a green tech entity, because their holding is going up to 70%. You need to keep an eye out on that as well. But what's the outlook from here on? If you can give me some numbers, Puneet. In the next few years, obviously, you've got that that lithium ion play as well that will be there in that entity. That's the HEG Green Tech. So what could revenues look like in that entity?
So I'll explain you. In this HEG Green Tech, it comprises of TACC Limited, plus our hydro assets, plus our energy storage solutions. Our hydro asset gives 150 crores of profits every year. It's a cash profit. We are expecting in our energy solution business, the EBITDA margins and the turnover will be substantially growing in next few years. Last year, we have had a turnover of 20 crores. We are expecting approximately 500 crores of turnover in our energy storage solution system business. In TACC, the production will start from the next year, FY26, and we believe there will be an addition to the EBITDA of 150 crores from the starting. And when the capacity utilization will go till 75%, the EBITDA will be approximately 350 crores from that. So you can expect there could be 1,000 crores of EBITDA coming from this green tech company in next 2-3 years.
Got it. That's the number that we're looking for then. So you're giving us a guidance in the next 2 to 3 years. HEG Green Tech can have a potential EBITDA of around 1,000 crores. We'll hold you to that number. Let's go across to Manish then, since he's joining in. Manish, what's happening? The margin is not improving at all. So give us a couple of details. Do you believe that the graphite prices, now electrode prices, have bottomed out? And what does it mean in terms of margins? We're down to the lowest levels we've seen since March 2021.
Yeah. Hi, Nigel. As you have seen, the margins continue to be under pressure, and I have said in the last interview also that it's still inching down, and the needle coke prices are also coming down with a lag. So that is why the margin is under pressure and it's likely to remain so for next 2 more quarters, it seems. But there's going to be light at the end of the tunnel. You see, all our peer group, industry analysts, big companies, big analysts like BCGs and SMSs are all talking about a number that it's going to grow up. The graphite electrode demand is going to grow up by 200,000 tons by 2030. And we have expanded, we are ready with our 20,000 tons. So we don't see a problem. So there's going to be light at the end of the tunnel. As you have seen, the steel production has been down for the last 2 years. Even if we,
Manish,
Yeah.
let's leave the bigger story out because we have heard that 2 lakh tons of additional demand by 2030. And we have heard about this green push as well, the shift from BF to EAF, which will be good for you. Let's get some numbers only about HEG and give me a few numbers. One is, what should the volume growth be? Because you have 20,000 tons that's come on board. So what is the volume that you did in the past year, that's FY24? And on that base, what kind of a growth can you look at? And what is the margin guidance as well? It's still in single digit. When do you see it scale up, say to around 15-20%? Just two numbers.
Okay, understood. So for the last, since we declared the expansion in November 23, it's only the last quarter of Jan to March that we got this capacity. So on that capacity, our total utilization was in excess of 80, between 80 and 85. Going forward for 24-25, we expect to be around 75% of the new capacity of 100,000 tons. So that's the guidance on that. And we'll try hard. The market continues to be bad. We expect 2 more quarters of these low margins. And we expect that, after 2 quarters, it should start improving upwards because people have made their corrections. There's no inventory in the system. So at the moment the steel production picks up, it'll be very fast. About the margins, you have already seen. It's still, I believe in the next 2 quarters, you'll see similar margin. And then I expect it to improve.
So improve to what level? And going by that 75% utilization level of 1 lakh tons, so that will be around 75,000 tons for the coming year, right?
Yeah, we aspire to do that.
What you did in the past year? Around, what was the average?
That was between 80 and 85. Exactly, somewhere in between of the, we just
whole capacity.
Of the whole capacity.
So last year you did roughly around 68,000 tons, and this year you're saying you'll do around 75,000 tons. Is that a fair estimate?
Fair estimate.
And these numbers improve, this margin improvement in the second half of the year, should it improve to mid-teens? Do you think that's a fair estimate?
I can go wrong by maximum 1 quarter. So if it is not the second half, maybe towards the last quarter, Jan to March.
What will it be, but in the last quarter? It goes back to 15, 20%, 20, 25%. What is it?
It'll only take a while. It can happen in the Q4 or the Q1 of next year. We're just standing at the edge of that. The prices, I don't think they've bottomed out. You will still see our prices going down next quarter also, but that is only because of a lag of that. So, but I think I don't think there's any room left for further price reduction.
Okay, just finally, got it. Final question, Manish and Puneet, then what is the total cash in the books right now? And in this demerged entity, how does the balance sheet look at both of them? Because as of now, you're a net cash company, even post that expansion. So what is the consolidated number and how does it get split up? How do both the balance sheets look?
So, Nigel,
Okay.
Please. So, Nigel, we are sitting with 1,000 crore of cash, of which roughly 700 crores will be utilized for this TACC business, which will be deployed in next 6 to 8 months. Remaining cash in way of investments will be with HEG graphite business. It will be going into demerged entity.
Okay, so 1,000 crores total, 700 crores goes into this green tech business and 300 crores will be with HEG. Got that correct?
Yes. Yeah, approximately. Correct.
Okay, well, gentlemen, thanks a lot for joining in and speaking to us. By the way, for the market, just wanted to mention that it's really a good-looking screen. So, a lot of stocks are picking up pace. Interglobe Aviation, by the way, is now above the 4,400 mark. So, big moves have been coming into that stock. It's up 50% this year already. We're not even halfway through the year. And something like a BEL is up 2.5%. Masgao Dock, Macrotech Developers surging now 4.5% higher. But let's connect with the management of Team Lease Services. For Q4, the company witnessed a steady top-line growth while the specialized staffing slowed down in Q4 after a double-digit growth in Q3. Ramani Dati, the CFO of Team Lease Services, joins us now to talk about that. Ramani, thanks a lot for joining in. Appreciate your time here. You've had a steady revenue growth of 20% on the top line. Do you think this run rate is something that will be maintained in FY25? And what are the growth triggers for the company now?
Definitely. The 20% top line growth for us is largely driven by the general staffing business. And there, the hiring momentum is very positive across segments like FMCG, FMCD, e-commerce, telecom, manufacturing now. So there, comfortably will be doing upwards of 20% growth on volume, headcount addition, as well as gross revenue. Where we are seeing headwinds is still in IT staffing. We are not seeing any recovery, indication of any sort of recovery at this stage in IT services. So that may continue to impact on profits, but on top line, since the contribution from IT staffing is minimal, that may not impact the 20% that we are confident of.
Okay, so you're saying that specialized staffing, so IT staffing is under pressure, but general staffing is still picking up. I know it may be hard for you to call a recovery in IT staffing, but can you see IT hiring pick up either in the second half of the year, in the first half? Any indications of a timeline?
That's, as of now, it's just a hope statement because, as I mentioned, at this stage, we are not seeing any indication. But again, it looks like second half of 2025, there can be a pickup in IT services. GCCs and non-tech companies are still hiring. So to that extent, we are able to maintain the run rate of our revenue in specialized staffing business. But in terms of net growth, we need the pickup of hiring in IT services, which drives the maximum volume of IT hiring.
So if IT, okay, by the way, that's the Go Digit IPO listing that's happened. Decent listing there, 4.5% higher. So we'll talk about that in a bit. Go Digit General Insurance IPO listing happening. That's the latest one on the Lal Street. But we'll talk about that. Ramani, since IT, there is no clarity on when things may pick up. Do you think that could put pressure on your margins? Because even in this quarter, right, there was that wage hike impact. And perhaps that may get extended into Q1 as well. Do you think, given the slowdown in specialized staffing, further margin pressure is likely?
That's right, because for us, specialized staffing is the highest margin contributor. And while with staffing growth, we are driving productivity and operating leverage. In terms of overall group level margin expansion, we really need the specialized staffing contribution to pick up. And again, on top of that, NEEM withdrawal scheme in our apprenticeship program has impacted profits to the tune of about 20 crore spread over multiple quarters. However, Q1 is the last leg with which we'll be fully done with the release of NEEM trainees. And hopefully from Q2 onwards, we can see consistent improvement in the margins overall.
Okay, so when you say consistent improvement in the margins, I mean, it's still at sub 2% margins. Any thoughts on what the band could be once the improvement begins?
We are targeting 5 to 10 basis points quarter on quarter. But if the IT hiring picks up, it can get further accelerated.
Okay. And in generalized staffing, you're saying that that has picked up. But any election-related impact that you see, how is Q1 and Q2 expected to pan out?
Very marginal impact on, especially in tier 2, tier 3 places. But cities and metros, we haven't seen any impact. Even in the past also, during election season, we didn't see any material impact as such in the overall hirings. Only here and there few pockets. But that's not material enough to impact the growth rates at scale.
Okay. Finally, just before we let you go, you have, what is the outlook on different sectors? I mean, what is the expectation on staffing in the metros versus what you're seeing in rural? Have you seen any kind of pickup geography-wise? Anything that you can share with us?
Yeah. In terms of overall hiring for us, metros and tier 1 cities are always the largest contributor. And a good part is from last few quarters, we are seeing good momentum in tier 2, tier 3 places as well, especially with industries like BFSI and manufacturing. So we are seeing good new open positions getting opened up, especially at the entry level jobs, the fresher level and entry level jobs. So we are seeing in small cities and towns as well, new formal jobs getting created. So that's a very positive sign. And even otherwise, for the verticals like FMCG, FMCD, there is an increased drive for formalization. So some of the jobs that we have added during the year, especially over the last 5-6 quarters, are not new jobs, but these are more of consolidation and also the shift of jobs from informal to formal. So we believe the trend will continue into FY25 as well, and not just in FMCG, FMCD. Across other verticals, we are seeing this preference for more formalization of jobs, which is good for companies like us, organized players, as well as for the overall employees.
Okay. And finally, the headcount addition for FY24 was around 13%. What's the expectation for FY25?
Within staffing, it's actually 20%, but that got offset with the headcount loss we had in NEEM program. Net of that, it came to about 13-14%. But since we'll be fully done with the NEEM loss in Q1 of FY25, even on headcount growth, we believe for FY25, we can maintain upwards of 20% growth.
Okay, Ramani, thanks a lot for joining in. That is Team Lease Services talking about how general staffing is picking up, but specialized staffing like IT is still under pressure. We'll take a quick break. Up next, Vikas Gupta of PG Electroplast will join in to talk about their Q4 earnings. Stay tuned.
Welcome back. You're with us here on Bazaar. Markets, of course, are doing much better. Flattish kind of start, but it's been a gradual up move. I mean, as gradual as it can be because we're just in the first hour of trading. But things have picked up quite a bit, which we'll address with specific stocks, etc., as we go along. Now, one big area which has done extremely well is this entire electronic manufacturing services, the EMS space. And stocks, of course, have really done very, very well. Varied kind of performance, but, on the top of the list, you've got names like Dixon. You also have names like PG Electroplast. Actually, we're going to talk about PG Electroplast because they also reported numbers and they put out some very aggressive growth guidance numbers for FY25 as well. Vikas Gupta is Managing Director, Operations at PG Electroplast. He's joining us now to take us through some of that. Vikas, good morning. Good to have you with us here. Thank you very much for your time. Prashant this side. So you're guiding for sort of revenues of at least 3,400 crores, right? This is after separating the TV revenues into a separate 50-50 joint venture. Could you start there when you say at least? I mean, is it a very conservative number? What can you really do if one were to move to the other more aggressive kind of number here? At best, what can you do from at least?
Yeah, good morning, Prashant. So right now, the numbers that we have put out as a guidance of around 3,400 crores, we'll stick to that. We'll not like to go beyond that. We are seeing a very robust growth in all our product businesses, like air conditioners, washing machines. And we are surprised with the kind of growth that we are seeing in our AC business in the first quarter of the current financial year is almost getting over. And we are seeing a very robust growth in our AC business. Similarly, in washing machine business as well, we have been seeing a very strong traction. We have onboarded a couple of new clients, and we are further expanding our capacities in our washing machine business also. So we are very confident that at least we should be reaching the numbers of around 3,400 crores, even after hiving off our TV business into a JV company.
And that is, if you do 3,400 crores, that's about 24% growth over FY24. Now, on margins, you've expanded margins in 24 over 23, gone up to 10%. And you say that in 25, margins will have a slight upward bias. Could you, again, quantify that, put some numbers to it?
So we have already given a specific guidance of around profitability of around 200 crores. And the EBITDA guidance we have not talked about this time. So we are talking about a PAT of around 200 crores on the revenue of around 3,400 crores. So there is a jump in the net profit margin on that. That is based on the kind of economies of scale that we are seeing in our AC business, in our washing machine business, and it is based on the lot of capital efficiency and other cost control measures that has been undertaken at our end.
What is the current sort of capacity expansion? Where are you expanding capacity? Could you give us a sense? And what's the total?
So we have given a guidance. Yeah. So we have given a guidance of capex of around 370 to 380 crores for the current financial year, which is a very aggressive capex guidance that we are given. That is basically primarily to further expand our capacities in our AC business as well as in washing machine business. We'll be putting our 2 new greenfield plants in northern India, one for AC and one for washing machine, and we are further going to expand our capacities in our plant in Supa in Maharashtra for AC. So based on that, we are feeling that we are positioning ourselves to harness all the growth opportunities which we see coming in near time.
Okay, all right. Hi, Vikas. Good morning and good to see you. And the bulls on the street believes, why does PG Electroplast not get a valuation like Dixon? It's already trading at elevated numbers, but going by the numbers you've seen, the bulls on the street are quite happy. Let's get a couple of numbers out of the way. On the products part of your business, we've got the absolute number, but split it up for us. The RAC business, last year you did around 1,320 crores. On that sort of a base, what kind of growth can you do? And also the washing machine business, it grew by 20% last year. On that base, what does the number head to? So I want the further split down of RAC and washing machine. Please go ahead.
So in RAC, we are planning and we are targeting a growth of almost around 30% again in our RAC business for the current financial year. And in washing machine, we are targeting growth of almost around 40% in our washing machine business for the FY 2025.
Okay, all right. And just to understand this washing machine business, the margins are relatively better. And how is the competitive intensity in washing machine? Because you're sounding very, very optimistic. You're talking about a 30% growth on a 20% growth. So tell us more.
So I'm talking about 40% growth, not 30% growth on washing machine.
40% growth in washing machine. Okay. And how is the competitive intensity out there, sir? And are the margins better on washing machine?
So margins are better in washing machine business, and the asset turns are also better in the washing machine business as compared to air conditioners. But overall revenue is smaller because the average selling price of the washing machine is way lower as compared to the air conditioners. So the competitive intensity is definitely tougher, but we are positioned. We have already aligned a lot of clients, and we have launched a lot of new product platforms in our washing machine business, which are giving a lot of traction for us in addition of business.
40% growth in the washing machine business is what you're looking at. Mr. Gupta, good morning. Just a couple of questions on your balance sheet. Will all of this growth come at the cost of higher debt? I mean, you're sitting on debt of about 325 crores. You think you'll have to take on more debt to fund capex?
No. So please understand, Sonia, we are having a cash balance of almost around 180 crores. We'll be utilizing that, and plus we will be funding the capex through mostly by internal accruals. We might take a small debt of around 25-30 crores. That's it, not beyond that.
And the capex would be what, about 380 to 400 crores per annum? Is that what you're looking at?
So 370 crores for the current financial year.
Okay, and how much of that will be invested in new platforms? In the R&D for some of the new platforms?
So basically that will be largely going to further build our capacities and capabilities in our AC and washing machine business. As I told, we'll be putting up 2 new greenfield plants in northern India, one for AC manufacturing and one for washing machines. And we'll be further investing in the new product platform along with the investment in the plant capacity. So we'll be launching new platforms both in ACs and washing machines.
Okay, all right. Final question before we let you go. You mentioned in your release that you're looking at margins expanding. Could you quantify by how much could it expand if you compare it with FY24? And also, is there an export opportunity that's knocking on the doors? Because in the next few years, that could be another revenue opportunity that turns up. Tell us more on both these 2 parameters, margins and exports.
So margin expansion should improve by almost around 100 basis points or like that. So maybe I don't know the exact number that we have given, but we are expecting a reasonable improvement in our margin profile. Regarding the exports, definitely we are exploring that opportunity, but still there are certain cost disabilities for us, which we need to overcome. And I think going forward, as the economy of scale starts kicking in and we start getting a lot of component ecosystem developed in India, so we should be more competitive in the export markets. Going down, maybe 2-3 years down the line, we should be able to do it. We are already started some small steps on that. We have started taking some small steps on that. And we are confident in the next 1 or 2 years, we should be targeting some revenue from the exports, etc.
All right, we'll leave it there. So around 10% last year, so about 11% approximately. I mean, margins is what you're saying you'll do in FY25. Because we'll leave it there. Thank you very much. Good growth guidance across the board. And hope to speak with you mid-quarter again. So that's the management of PG Electroplast. Stocks up, flying away. Strong start and it's holding on to gains. If I think it's even built on some more gains there. 75 on the Nifty as well. 22,673. It was a slow start for the Nifty, but now, of course, looking very, very strong. We'll shift focus to the commodity markets. Manisha is standing by with what is top of mind. There was a bit of profit taking across industrial metals. Is that continuing, Manisha?
It definitely is, yes. Most of the metals have opened the Asian markets on a weaker side. Actually, it started with New York session yesterday after we saw the US Fed minutes come in, where there is not enough push for the rate cuts given the current inflation background is the statement that we saw coming in from that meeting, and that has weighed onto the market. What it also has done is that it has strengthened the US dollar index, which is always not well for the dollar-denominated commodities. So if you look at the gold prices, we've come off the all-time highs, 1.7% of a decline overnight. Silver prices fell nearly 3% as well. But the deepest of cut clearly came in for copper. Remember, we were trading at an all-time high for this one, nearly 4.5% of a cut overnight. But the copper prices still are around 28 to 30% higher in 2024 so far. I want to talk about copper some more because here we've seen prices fall almost up to 4.9 from an all-time high of 5.2, which also was a level that the copper prices made within this week itself. Now, the near-term demand in China clearly has been on the weaker side. We've been talking about that. The run-up always was speculative, thinking that a long-term or a medium-term demand is something that perhaps will not be able to meet. So when you look at the LME copper prices, we've seen all-time high of 11,104 onto that. Currently, we are trading below $11,000 a ton onto that one as well. Now, when you look at the supply concerns, markets are looking at a longer term onto that one. If you look at the China inventories, those also have surged to nearly 4-year highs, and that's weighing onto the Shanghai copper prices also right now. More interestingly, there are a lot of short squeezes that we saw when it happened on COMEX or CME for that matter. But there are reports that nearly 100,000 tons of copper is en route right now to CME exchanges to ensure that all the short positions that were done, bearish positions that were done, the delivery for that is coming into the markets. And that is what has also led some premium of those prices. Also, when you look at the COMEX positions itself, the speculative net long stands at 72,000 contracts, which is 0.8 million tons. Now, this is speculative net longs. When you look at the producer net shorts, well, that clearly is a longer number of almost 1.04 million tons. That also is a mismatch that the markets are right now digesting within there. When you look at the Chile and various other producers, well, we are looking at 20,000 tons from Chile as well, which is en route US by the end of May. And there are larger shipments actually which are in pipeline for the month of June and July. So copper clearly looking at all of this copper moving around the markets, and that is what has led to some profit taking. This is a statement that has come in from International Copper Study Group, which says that copper will end this year and the next in surplus as well. There is that much material that really seems to be coming in from warehouses for the market. So the run-up that we've seen in many of these metal prices, perhaps we've seen the high for a very, very near term. This is what we've done in matter of last 24 hours, really, in sense of prices. Now, this is a high that most of these metals have made it in this week itself or for the month of May. But currently, when you look at the prices, we've come off those kind of prices. All-time high for gold was 2,450. We're trading at 2,370. Silver as well, $2 has been shaved off. And that's exactly what we have seen for other metals. So whether it's zinc, aluminum, nickel, we're off the kind of highs that we made for 2024.
Okay, thanks a lot for that. So big moves coming into the commodity space, and also, by the way, in the markets. A lot of stocks are moving around. So on the other side of the break, we'll be joined by the management of Arvind Fashions to discuss their Q4 earnings and the outlook for FY25. Stay with us. Well, as promised, we have Arvind Fashions, the management joining us now. Q4 was a good growth in profits because of lower discounting along with higher contribution from the retail channel. Their EBITDA margin improved and they have added 24 new stores in Q4. Kulin Lalbhai, the Vice Chairman and Non-Executive Director of Arvind Fashions is with us. Kulin, hi, good morning. It's been a while since we've spoken to you, so good to see you on the channel. I want to ask you about what the market has looked like, because overall the commentary that we've had from you is that the market has been subdued for the past couple of quarters. Consumer buying patterns have changed a bit. But how is it looking like right now? For FY25, do you see any kind of conclusive recovery in demand?
Yes, so, the last few quarters, in fact, have remained subdued for our industry, post-Diwali. The market hasn't seen too much exuberance. Within that construct, I think, one should de-average it. I think there is a good sort of momentum for the premium side of the market. Our two brands, Tommy Hilfiger and Calvin Klein, which are our bridge to luxury brands, have done exceedingly well. In fact, they've possibly done the highest level of growth in both top line and bottom line last year. So there are parts of the market really performing very well. The belly of the market, is where we've seen a little bit of sluggishness in demand. We do hope that as the year moves on in FY25, we do expect some of that demand to come back, and perhaps as we move along, we will see an improved momentum.
Okay, you'll see an improved momentum. What do you mean when you talk about improved momentum? Because, I'm just going through your power brand segment, right? Just going through it one by one. There was barely a single-digit growth on the top line this time, as well as in FY24, 5% growth is what you saw. Do you hope to get to double-digit in FY25?
Yes, so in FY24, I'll just point out, especially in Q4, most of our channels grew at double digits. The reason why the overall growth came to a single-digit growth is that in one of our channels, which is the department store, we had a little bit of destocking happening. So it's more of a phasing between Q4 and Q1. But the underlying growth is very much closer to double digits in Q4. In the full year FY24, again, there was a channel where we had a little bit of a pivot which is our online channel. We have moved from a B2B wholesale model more to a direct retail model in online, which had a little bit of a one-time impact on our growth. But if we look at the company today, I'm very confident of the growth drivers we have in place. The coming year is going to see strong square footage addition, much higher square footage addition than we had in FY24. We've got a lot of exciting retail formats which we are now rolling out across the country. Our adjacencies, which is footwear, innerwear, kidswear, and we've launched women's wear recently. All of them are clocking very high levels of growth. So I am confident that FY25 will see a much higher level of growth than what we had in FY24.
Got that. Kulin, hi, morning. Prashant here. So for the adjacent portfolio, you also sort of guiding that this will expand to a much larger share of your overall business, right?
Yes, it's around 15% today. It's been growing at more than 20% for us. So with that kind of trajectory, we are expecting it to become 20% of the business, in the near term. So it is at a much higher level of growth today.
And here, are you kind of sort of what are you most excited about? Is it the kids' wear segment?
So we are excited about quite a few, but the one I'd like to call out a lot is our footwear business. I think, footwear is seeing a structural shift where a business that used to be largely formal, which was the leather black and browns, is moving to a completely fashion sneaker, territory. And our company's core competency has been the casual lifestyle. And we achieved that pivot in the apparel side of the business. And, we are very excited that with this structural shift in our portfolio of brands, we want to replicate something very similar in the footwear side. So, we've got now a 300 crore footwear business, which is scaling up very fast. And we are excited about the potential of that business.
And this is in terms of price point, where is this at, for the footwear business?
It kind of mirrors our apparel strategy, which is that our sweet spot is to go after middle India. Our largest brand, US Polo, is now a 2,000 crore brand. It's the largest in its category. And the footwear part of that business is seeing huge potential. So I think the middle India is where a lot of consumption growth is going to come. And that's where we will see a large part of this business as well.
Okay. So any more insights that you can give us into what's happening? Because, the sense that we get from a lot of players we speak to is that tier 2, tier 3 cities are picking up now quite a bit, even in the premium and luxury spaces. Is that a sense that you're getting as well, that this K-shaped recovery that everyone's talking about, premiumization, is not only in metros, but also in like tier 2, tier 3, slightly semi-urban areas?
Yeah, so, if you take a step back, what is happening in the apparel business is that there are two types of, movements happening. One is that customers are going to pay more for differentiated products and aspirational products. On the other side, there is the value side where, sharp price points with a lot of efficiency also doing well. So it's the middle that kind of will come under pressure. So if there are brands which are constantly innovating, constantly creating differentiation, creating aspiration, that will keep, those brands relatively in a much better position. So as a company, what we've done the last year is we've really focused on energizing our core brands. We've invested much higher in marketing. We've had 100 bips increase in marketing spend. So we have improved our bottom line by 150 basis points, even after investing 100 basis points more in marketing. We've really upgraded our retail experience, and we're constantly premiumizing product, because we believe the brands that will really focus on differentiated aspirational experiences are going to win in this sort of market. And that's what we are doing across our portfolio. And I think if you look at both tier 1 and tier 2, as a matter of fact, even tier 3, there are enough consumers who are wanting these differentiated aspirational products. And I think that's the arc that we are driving towards in our company.
All right. And you're saying that ad spends will remain around the same 4% of sales level, right? In FY25 as well. You're seeing and of course, overall, you're expecting a 12 to 15% growth in revenues for the full year. Kulin, great conversation. Thank you very much. Good luck to you and your team. And appreciate you joining in here on CNBC-TV18. Well, that's Arvind Fashions there. Market is up 100 points, so in 3 digits, 22,700. So we're not very far away now. I think the earlier high was 22,794 or so. So, it's basically 0.5% away from where we are at this point in time. Lots and lots of stocks are, of course, moving. Market breadth, I must say, it's not completely one-sided. You got about 1,250 stocks higher and about 1,100 stocks which are lower. So it's very evenly matched still, although the frontline indices are doing well. We take a break. It's a wrap on this edition of Bazaar. Chartbusters will pick up on the action in just a bit.